All right, you are live.
All right, everyone. Welcome to your March 25th Portfolio Builder Trade Alert update. And the teaser today was that $6 trillion won't save the stock market. There's really only one thing that will. From all the analysis I've put into this, the bottom line is there's really a two-part strategy that I believe can curb the disease that's causing all this downturn in the economy. And it's going to be a little painful and change the way society looks at things, but it will work. And so the short answer is what the world really needs is not a 15-day quasi lockdown, which is what we have currently. We have Trump, good old Trump's hoping that we're all going to be back into church for Easter. I don't know if he's thinking that Jesus was reborn on Easter and so will America or what. But the Chinese figured out the solution. They've beat the disease quite easily. And now they're laughing at everyone else as we suffer. And what we've seen so far is really the preview to the movie. This is a horror flick and it hasn't even begun. So absolutely 100% confident that the stock market has not just a little more pain, but a lot more pain headed our way. And so the solution is not going to just be quasi lockdowns here and there. Really what we need to do is have a worldwide lockdown for more like 60 days and then re-emerge into society wearing masks. So that's, not something I've made up. That's what China did. And they're back to business. So this is also what pretty much all of the Asians are doing. And again, they've had a great job at curbing the spread and then being able to get back into operation. Now, is this like something that we're gonna have to do forever? Well, if the flu can, or rather if this disease, the honey badger is what some people are calling it to avoid censorship. If it mutates significantly, mainly the mechanism for how it attaches to your cell, then vaccines may not even work. So hopefully we get a vaccine in about 18 to 24 months. But again, we did not create a vaccine that worked for most other deadly viruses we've had to deal with, including SARS, which has the same shell as this virus does. So the solution is really more along the lines of shutting down the global economy for 60 days, which would essentially let everybody who has it go through all the phases of sickness and then develop immunity and then re-emerge into society with masks. So there's not enough masks. It's very confusing why there's such a limited supply. Our government's now telling people not to wear masks because they don't want to create upset people who don't get masks, bottom line. So that's really what I think will curb the economic drawdown. It's going to be painful. It has to happen. There's really no other solution that would work. So that's what I think will end up playing out, not because that's what Trump wants, but that's really the only solution that does have hope. Okay, let's look at our trade alert from head to toe. So again, this is really the secret, and hopefully they're mass producing these now. Not sure exactly how the supply chain works for this, but so far we're not wearing masks and we have a 15-day kind of half-assed lockdown. So I think they're just baby stepping us and trying to get to a strategy that will work. So that's what I'm looking for in that. Okay, so we're predicting stock crash. Again, if people aren't going to work and corporations are shut down, you could throw all the funny money you want at it. It's not going to create real economic output. So we're going through a prolonged period of slowdown, and until the proper medicine has been delivered, it's just going to be slowly but surely taking hits at the stock market. So we had this week Bill Ackman and a bunch of hedge funds come out, Jeffrey Gundlach, all sorts of high profile funds. I don't know if they were guaranteed to do this or what, but they've come out saying, oh, the crash is over. We're betting big on America. This is the time to get in. We had a record jump in the S&P 500 yesterday. And again, $6 trillion of stimulus now being pushed into the economy. But everything except what would really stop the crash is in play, which is buying stocks. So we have a stimulus plan which will ban anyone who is getting stimulus from buying back their own stocks, one. And two, the Fed's not yet caved into literally buying the stock market. They're buying corporate bonds, they're buying US Treasury bonds, they're buying mortgage-related loans, but they're not buying stocks. So I think that would be the final move the Fed will be forced to take before too long. I don't think they do that unless we crash below 50% from the high, though. Okay, so let's look at our strategy. Today, your goal is to put down the framework to build the house that we plan to build here. And this is going to be essentially put options that we own to give us confidence to buy stocks during the predicted crash. Now, the stocks I'm interested in are not just your general S&P 500 SPY ETF, not until we have a real recovery in all industries and sectors, which again, I believe is about 2 years out. There will be, though, a handful of industries that will benefit from all the money the government's going to have to print. And unfortunately, I think 6 trillion is just the beginning. It's quite likely going to add up to be much larger than that. And so step one is to get the foundation built, which is our put options. And those are trading at a 30 to 50% discount today. So if you've missed this trade, you're going to have a better entry point than I did in our portfolio. But this does give us downside protection for the next 2 years. And I think we're going to need all of it. So again, the plan is to sell these as we get closer and closer to each expiration, and then to eventually jump into positions in healthcare, biotech, medical devices, as well as defense and e-commerce ETFs. So I have 5 ETFs I really like that we're going to be jumping into in terms of US equity exposure. I'm also interested in getting oil and gas companies in the United States for extremely cheap, but I still think there's a lot more pain coming that way. So that's really the plan right now, as we put up these put options and sit back and wait for this virus, which really can't be contained unless we take the measures I just outlined to really just slowly pick away at the stock market. So it can either happen fast or it can happen slow. It's all up to the governments and how they choose to deal with this. So these are the 5 put options that I recommend you own. The last one you own 3 of. It's our most leveraged bet with the most time premium. This is based on a $75,000 portfolio. So if you had $150,000, you would double this. So if you had 150,000, then you would go to 2, 2, 2, 2, and 6. Now, if you're down a little bit on this position because you got in either last Friday or Monday, and remember, we had a limit down in the futures market until this whole parade of hedge funds and stimulus came through. So I don't think we're going to have drawdown for long. I'm not recommending increasing your position. If you've missed out on the trade, just realize you can get in for about a 30% discount from where I did. Now, what would you do if you had, let's say, 300,000? So a lot of people seem to get confused with this. Then you would multiply that by 4. So you'd be getting 4, 4, 4, 4, and 12. And again, it would cost probably on a $300,000 account. I'm going to guess it costs around 20 today to build the foundation for what we're going to need. Okay, so I hope that's really clear for everybody that it's relative per 75,000 total following the program. Now, what if you have less? What if you only had 30,000? Well, I would just make sure you have no more than 10% of your assets invested in these puts, and I'd probably start deleting maybe those two right there. So you should still be able to build this with half that account size by leaving out some of the longer duration puts. Now, let's just take a quick, I'm not going to unmute anyone, but if you have a question about these trades right now, please post it in the chat box before we continue. Okay, Don S says masks are recommended for those who are sick. Yeah. Well, you're going to see, in order to curb this, everyone's going to have to wear a mask. We just don't have enough. So that's why they're saying that. Bill Taylor says equal amounts. Not sure if that's a question. If that is a question, Bill, please rephrase it with a question so I can make sure I get your. Tyler G says had to leave the chat, was on the phone with Victor. Okay, glad to have you back. Bill Taylor says, are you buying? I'm buying out of the money puts, and I'm not looking at deltas. I'm trying to predict where the S&P 500 will be at different points in time into the future. Someone has April 17, 163 calls. I guess that's on the TLT, right? We're
Yeah,
not
it's ULET.
ULET, yep. So we're not changing any. We're only going to trade the TLT on Thursday, unless I think it's an emergency to sell quick, which I don't see. The only thing that would make me think that there's an emergency now would be a two-part play. Is one, I want to see stocks have, again, record-breaking crashes that catch leveraged funds off guard. And at the same time, I want to see the TLT jumping towards that 180 level. So again, we missed out on some huge profit taking, not because we had the wrong prediction what the stock market would do. We didn't realize that the crash in the oil and stock market combined was so tremendous that it caused people not to sell what they wanted to sell, but to sell what they could sell. And that was that Treasury product. So no change in our TLT. Yep, no change in our gold position. Gold's always manipulated by central banks. So if you look at the ETF GLD, go to Wikipedia, go spend some time on that. Looks good. They have about they're kind of like a reserve banking system for spot gold. So they have like 1/10 of the assets. So it's highly leveraged. But the catch is they have a relationship with JP Morgan and HSBC, where they have a short position constantly betting against spot gold. So my expectation is every time we see spot gold get towards that record high, that we're going to see central banks dump gold and cause volatility. So you'll have all the, the momentum chasers jumping in as it approaches all-time highs, and then they're going to get crushed. And it's going to continue to happen as long as the central banks can get away with it. And they just have such massive stockpiles that they can continue to do this. So in our program, I do expect that gold is going to be tremendously profitable in the long run, but we have to understand the games that the central banks are going to play with gold as they slowly but surely try to accumulate as much as they can. That's why I like the gold miners. They're not really at the, they're not going to get pushed around quite as much by the central banks as they just slowly but surely mine their gold and flip it. And again, real metal is having a huge discrepancy against paper metal. So I really like those gold miners, and we're having quite a nice bounce on that. Okay, we got new messages popping up. Let me. Josh, yep, yeah, no problem. Yeah, gold's going to be, so I think we're going to have more opportunities to get gold a little cheaper, because think about it. If we're facing a true worldwide crisis and the only solution out of it is to raise capital for the governments to redistribute wealth. Well, if every investor is making money on gold, that's really not going to help solve the crisis. So I think they're going to be incentivized to punish gold investors who bet too heavily on it. Now, in the long run, I think gold's going to continue to rise, and I love being long gold. So we'll continue to optimize how we play that position. Doug says, I have the 240 put. Yep. Yeah, we're going to be holding these for quite some time, months and months. So really, I'm not going to let go of my puts until the government has completed not a 15-day lockdown, but more like a 60-day lockdown. And then they've come out with masks, because otherwise we're looking at millions of dead people in a very short order, and tens of millions of people being pushed into hospital systems, which will be a complete meltdown in society. And obviously they won't be able to keep stores open if people are flopping over dead everywhere. Okay, Diane says, can you talk a little bit about placing the options? Yeah, so Diane, you want to buy to open. So you're going to be long the put, not short. If you were to sell to open, you'd be writing the put option, which is extremely dangerous and the opposite of what we endorse. You want to purchase the put. So it's kind of like taking out a loan and you're putting down collateral for that loan. It's something like that. And essentially, if the US stock market falls, these put options will go up in value. And I'm very confident that it will. Until, again, we've had a 60-day lockdown and rolled out masks to everyone. And I just don't see any other solution, period, that will really solve the crisis. And it's going to be funny seeing Americans start to slowly but surely wear masks when they go out. But again, that's what's worked in China, in South Korea, and Hong Kong, and Japan. And that's what will work here. Anything else will not. So Diane, does that answer your question? And again, this is part one of a multi-stage strategy we're rolling out. We want to get downside hedges. And then as we see the crash begin, we're going to rotate capital into healthcare, medical device, biotech, defense, because I do think this was a designed attack by China and Russia. So I do expect retaliation. And then we're going to eventually potentially grab some oil and natural gas companies in America that are super cheap as well as some e-commerce ETFs. So the bottom line is many sectors in the United States are just going to be kept alive on life support with this massive stimulus, but they're not going to be generating profits and revenues and growth. If anything, they're going to barely stay alive, take on debt that's really tied to not laying off people. Tomorrow's a big unemployment report, and I'm afraid the unemployment numbers are going to get just out of control in the next several months, just about no matter what we do, unfortunately. Bill says, I see what you're doing now. Yep, so this is, A, should make a tremendous return just with this single setup of trades, but two, it's going to allow us to buy up important assets of the future while they're falling like a rock. So if the momentum's to the downside, we want to have some protection as we buy those stocks. And so right now, volatility, I believe, is relatively cheap compared to what it will be in the future. And so if you think the stock crash we've had so far was scary, or the deaths and shutdowns we've had in America are scary, I would tell you this is the preview of the movie. So we've got a little 2.5 minute clip of a full featured 2-hour film. And they didn't reveal much in the preview, I'm afraid. If you've been watching this play out in other parts of the country, it's absolutely horrifying and will completely cripple our economy as it continues to grow. Okay, we got 8 new questions. Let me see. Diane says contract box is one. So Diane, are you trading a 75,000? How large is your total portfolio size that you wish to follow over the course of time with our program? Okay, yeah. So you'd have one of each until you get to the leap option, and that's 3. Yep. And you're getting in about 30 to 40% less than I got in. So your total buy-in for downside protection is going to be significantly less than mine is. Okay, Tyler says, I'm interested in the pro program, also looking to take advantage of more short-term option opportunities alongside as your volatility is high as of late. Yeah, so I basically have 3 major strategies that I think will be high probability, and the macro forces will almost ensure that this comes true, Tyler G. So the big picture is that we have a crisis on our hands. Roy got a question. Let me do. Okay, we got a ton of questions, guys. Let me just start from the. Let me scroll up. I'm gonna come up from the top and catch up because we've got a lot of questions coming in. I'll put on our track record here also. Okay, Dan O'Connell says, so it looks like these options, you think the downside could start anytime now and up for 2 years. Yeah, I think until we do, I think what it's going to take is a global. Let's keep all the mics off for now, Ryan. I got more questions than I can handle just in the chat box. Yeah, I think that we have to have a 60-day global shutdown and then reemerge with masks. Otherwise, the other option is that this works its way through society. So if we have 350 million Americans, and let's just say this were to infect, let's just say we started really protecting anybody over 50, just said, hey, you can't leave your house without a mask, but let everybody else go live life normally. Well, if we just had half of America catch this in the next 12 to 24 months and 1% mortality rate, it's about 1.2 million deaths. So far we have about 500 deaths in America. Maybe it's like 800 today. It's growing exponentially. So if we want to go that route where we just say, you know what, screw it, let's just pretend it's not a problem. You're going to be looking at something like 10 million people on ICU in America alone and 1 million deaths. So as soon as we get sort of close to those numbers, that would be one signal to say, okay, the economic downturn is close. So right now, you know, we're not even at 1,000 deaths. So again, this is the preview of the video so far, of the featured film, if you think of it that way. If we want to fix the problem quicker, it's going to take a 60-day shutdown globally, not just the United States. Because think about it, let's say we did it here in the United States, but we don't do it anywhere else. Well, that would work if we wanted to shut off all travel. So no flights in or out of the United States. That's not going to work. Because if we go to a 60-day lockdown, it would basically reset the clock here in the United States. We'd have maybe 1 out of 1,000 Americans so far infected, probably less. In New York, they're estimating it's 1 in 1,000. So somewhere like where I live, it might be 1 in 10,000. So there's just really no way to escape it. Humans are just absolutely helpless with this one. So that's what's going to take. 60-day shutdown globally. That will really reset the clock, and you'll give maybe 1 in 10,000 humans immunity. But then every 9,999 are still at risk of being infected. So the hospital system can't support 10,000 people right now on ICU, much less 10 million, unfortunately. So I think that the government knows this. They're not stupid. humans are just not ready to cope for this, especially Americans. So they're baby stepping us. You've watched Trump. If just go find any clip where they're trying to critique Trump about how he's dealt with this, and you'll see he's baby stepping us towards a reality that many humans just don't want to cope with. But it's proven it. That's what China did to deal with it, and they're getting back to work. That's not how the United States is dealing with it. So until we are, it's really foolish to think that that we can solve the problem. And so bottom line is this infects just about everyone. If we just take a low ball 50% over the course of 2 years, and then say that 10% of those need hospitalization, that gives you 12 million people that you're going to have to deal with in some period of time. Now, and that will completely ruin the medical infrastructure. So there's no chance. There's absolutely zero chance the economy opens back up on Easter. And Trump was funny. If you've noticed, the press conference rooms now have way less people. He asked the doctor on stage, I don't know if he's playing dumb or if he just doesn't know this, but he asked the doctor in front of the live crews, is this how the press conference is going to be here on out? Are we always going to be having just a handful of reporters in here so far spread out? Or when we kill the virus, will we be able to pack it back up? And so there's no killing the virus. The flu mutation from the early 1900s is here 100 years later, and mutates every year. And, we're just trying to guess what the mutations will look like and create vaccines for it. So this virus is not going anywhere. And once you catch it, you have it in your body for life. And it's going to likely mutate. So even if we do have vaccines, that doesn't mean it couldn't mutate again. Not to mention, if you really dig deep as to where this virus came from, the people who made it could have a whole chest full of these. What's to stop them from releasing another one if they did indeed release the first? Okay, yeah, our puts are down. Doug mentioned, and again, we had an 11% jump in the S&P 500 yesterday. People are covering their shorts. A bunch of hedge funds came out and said, buy the dip. Usually we are seeing these big jumps in the market right before a bunch of bad news rolled out and it crashes significantly harder. So it's really code for the insiders, which is mainly the owners of these corporations and the banks. Last chance to get out is what I would read into that. I highly, highly doubt that the stock market will be at this level for longer than 30 days. Karen says gold, you say long run. How long is long to you? Well, we're seeing China now start to actually criticize holding its US debt, threatening to sell its debt, and endorsing gold. At the same time, we're having Russia try to keep oil prices crash to bankrupt Saudi Arabia, as well as United States oil companies and natural gas companies. So I think we're going to see every time gold spikes, that central banks dump some gold into the market to try to scare off people who are at least chasing the momentum. But over the course of time, I think you're going to have smart investors buying those crashes and slowly taking away the supply from the central banks and trying to get their hands on the new gold that's being minted. So I think it's something like a pressure cooker for the gold market right now. So it's like an $8 trillion market, or at least it was quite some time ago. And most of the gold is held by the central banks. So they certainly can swing that spot gold price around. But there's just so many people wanting to ditch fiat currencies and load up on that asset right now because of the stimulus plans that all these governments are rolling out. And every day it gets more and more magnificent how much money we're going to print. So I think with a long-term outlook, gold is a great setup, as well as gold miners. So we have a pretty decent 12% position in gold miners, which are up quite well. Spot gold is getting near that level where I'd expect central banks to punish people betting that here's the big run. So I think that's really the big force you're fighting, is that it's open knowledge that JP Morgan, HSBC have a huge short on gold and that they own the GLD, or at least they're partnered with the GLD ETF. And that ETF's a fractional reserve. So it's 1/10 of the real value. So I haven't really thought about the implications of that, but it's a leveraged product, something like our banking system. Tony says time on our, we're going to hold it close to expiration and start buying longer duration, Tony. So that's the plan. We only have 2 tiny positions on GLD right now, and they're going up. So the momentum is in our favor currently. Jeff Stone, can you discuss FAS and text drop? So no, yeah, that's fine. So yeah, we bought some inverse ETFs the day before we had the biggest jump in the stock market in history. So that's unfortunate. The TLT position and gold position basically paid for that. So we're having very little drawdown, no change, 100% confident stock market. You can't keep Main Street closed and Wall Street open. Okay, that's a recipe for disaster. Unless the Fed wants to hand out something like $15 trillion, $30 trillion to buy up all the stocks and nationalize the stock market, then you're going to continue to have bad earnings, layoffs, growth of debt while revenue and profits are deaccelerating or dropping. So it's just a disaster for technology companies and for banks, especially with rates at 0 and potentially going 0. So my suggestion is, yeah, we're down on our short S&P 500 position, but time's on our side. And typically we're seeing the media, the banks, even the president go hype up the market right before some bad news hits. And so it wasn't too long ago that I was getting yelled at because we missed a jump in the SPY. And then something like a week later, it was crashing at record pace. So Main Street's closed and needs to stay closed for 60 days, not 2 weeks. And Wall Street's open. Tomorrow we get unemployment numbers, and in 14 days, likely the death rate will be 10 times what it is today. Tyler, okay, we're back to Tyler's question. I'm interested in the pro program. I'm looking to take advantage of more short-term option opportunities. So I think you really have 3 really good plays here, Tyler, that are just dead obvious. And that's what I tend to focus on. So I think the first dead obvious play is that the stock market's overextended, over leveraged, and that all the money in China won't keep it up. And so unless the Fed wants to blow out the value of the dollar by buying up stocks directly, if Main Street's closed and Wall Street's open, that's a recipe for disaster. So you're going to see a lot of people start selling their savings, their retirement savings, just to stay alive. You know, the stimulus, they're going to shoot out what, $2,400? That's not going to fix anything. Businesses are going to start conserving all the cash they can as they start to wake up that this is not a 2-week fix. 2 weeks will do absolutely nothing to curb this. Absolutely nothing. May slow down the growth a little bit, but it's not going to, you know, it's like slowing down a cancerous cell. It's still going to keep spreading and growing. So you can go in there and remove part of the cancer, but if you don't get it all out, it'll just start growing again. So that's really so the big opportunity right now, I believe, is catching a fast drop in stocks. So that's one. So I really like these trades. Do we have to be patient? Yes. But will it come quick and violently? I believe yes. Okay, so that's 1. 2, how do we solve the problem? So this is where things get a little outrageous, is realizing that the way this is solved is right here in the Treasury market. So when you get a crisis, you got to think about, how do we solve the crisis? Well, in the 2008 crisis, we had something like $300 billion of mortgages that were lent out to people who just had low income, bad credit, and couldn't make their mortgage payments. In fact, some people are taking out 2, 3, 4, 5 loans and turned into a housing bubble. Now they repackaged those and gave them fake high ratings, AAA ratings, and turned it into something like $3 trillion in assets. And so that's when we had the 2008 crisis. How did we fix the problem? Well, we cut rates to zero, which creates this circle of life for primary dealers to buy bonds. That's essentially a guaranteed profit. And the solution is you get the big banks to buy up US debt. The government reallocates the resources to where the pain is in the economy, and they try to bandage it up and let the economy recover. And as the economy absorbs the losses by diluting the value of the dollar and increasing the national debt, then you can roll out QE and things go back to normal. And that QE is designed to let the primary banks take a profit for their risk, loaning money to the government. And then with those profits, they go buy up stocks for half off, sometimes even more. Same thing was what they did in the dot-com bubble. Same thing is what they do in all crises where the banks can't solve the problem themselves. So if it's a small fire, the bank's happy to go take over your company and give you a loan. And they love doing that. But this crisis is far too large for any single bank to do this. That's why we're trying to print $6 trillion, which will dramatically dilute the value of the dollar. And so that's where the big money has to go. And they're going to punish money making profits anywhere else. It's just, bottom line is, trillions has to flow into the Treasury market. And that's going to be funded by JP Morgan, Goldman Sachs, Citi, all these huge banks. Now, if you think the banks are going to go fund the government and lose money, you're crazy. And so this is a system they absolutely control 100%. So the Federal Reserve is controlled by the big banks. And again, they're not going to lose money loaning money to the government. So I think your slow grind is in the TLT. The big risk here is we got China and Russia and their allies trying to dump treasuries, but we have our Fed ready to just print an unlimited amount of money to protect our bond market. So I really like the TLT for until we're done raising the money we need to raise. And I believe this will continue to crush stocks just in itself. So forget Main Street being closed. Just with the stimulus we now have to fund, you got to realize these resources have to come from somewhere. And it's not a video game. This is not some video game where we can enter a cheat code and all of a sudden we have increased economic output. So that's your two big plays that are just dead obvious. Stock market crashes, bond market rallies as we raise the capital that the government's now signing today, which is $2 trillion at least in Treasury issuance. So now, could they make the yield go up a little bit more so the banks have more room to ride before we get to negative yielding risks? Maybe, but again, now you have at least 12 trillion in debt outstanding, held outside the United States, that's going to be losing value in their underlying bond if they let yields rise. So I think they're going to be very hesitant to let yields rise here on out, now that we have to start massively increasing the Treasury auction sizes. So just this effect alone of trying to fund $2 trillion probably will take a year at a minimum and really create punishment for other asset classes. Now, I like gold. I think in the long run, gold's going to go up, but it may take some time. And I think we'll see central banks continue to create that volatility and try to punish. At least people are trying to bet it's going to break into new highs. I could see them really just tearing people up. And it's easy. They just sell some spot quickly in a very short period and then buy it back up for cheap. And they can do that over and over and over again. So I'll likely look for sell-offs in the gold market to bet that there's a rebound. So I think GDX can slowly grow as this trend continues, and spot gold is best to buy the dips and then sell as we get near new highs, at least in the short term. Roy says, does it make you nervous that the Fed said they're going to fund the government until we're out of the woods, no matter what it takes? And Trump and some of his talking heads seem to be leaning towards letting it rip through the country to save the economy. No, that's actually what I expected to happen. As you know, I expected the government, first they threw out $8 billion as a stimulus plan. And I was the first one to say it's going to cost trillions. Now Kudlow goes out there and says it's a total of 6 trillion yesterday. Holy crap. Now that's a mixture, they're loaning money out to every little aspect of the market. I think it'll slow down the stock market crash. It'll hopefully dilute the dollar, but that dollar index we'll look at in a minute is still really high. But the bottom line is, if you have Main Street closed and you have Wall Street open, that's a big problem. And as people run out of money, they're going to sell stocks to survive. So if we sell 3% of the value of the stock market, it's like $1 trillion, $900 billion in one little blast. And the market can't handle that. And yeah, I'd love to see it somehow be resolved, whether it's, if we let it rip through the economy, Roy, through society, let's just say, it's unthinkable. I don't think he'll get reelected. So how's Trump going to get reelected? Let's think about that. That's really, Trump wants to be reelected. Okay, if we have 1 million people dead in the next 6 months, and we have 10 million people who are on a ICU, there's no way in God's green earth he's going to get voted back. So I think he can get away with free handouts to Main Street and get it passed easily. One, and I think he can get away with the stock market crash if he saves lives. And so far his polling is going up, and he's been baby stepping towards this solution. Now I think the American people aren't really ready to cope with what's coming at them, but yeah, just take some easy numbers. Let's just say there's 400 million Americans. There's 350. Cut that in half. Let's just say somehow we magically only infect half of them. Then you have 200 million people. Well, they're saying 20% of these people who get infected are going to need hospitalization. Let's just cut that in half. Let's just say miraculously it's only going to be half of that. Well, you're looking at 20 million people flooding the hospital system in 6 months. A year. I mean, they can't handle that. And then you take, in Italy, the death rate's closer to 10%, which is horrifying, but let's just say 1%. Well, 1% of 200 million is 2 million people. So if that was spread out over 10 months, we're looking at 200,000 deaths a month. No, it's not gonna, there's no way society is gonna allow that to happen. Okay, Mike B, what strike value do we use for the puts? Okay, so I have a layered approach that allows us to take profits and build a position as this crisis unfolds. So here's the 5 I'm currently endorsing. And again, you can get in for a 30% discount from where I got in. So lucky for you, and great time to do it. Okay, Wes says, another opinion. We all know what they are like. Italy, oldest population in Europe, dense population with the highest amount of tourists in the world, very high percentage of smokers outside New York. What is the US infection rate? We have 500 cases, 5 deaths. Yeah, it's just, Wes, like, who cares what we're at right now? Here's what matters. It's extremely infectious. They're estimating 8 out of 10 people who have enough exposure to it are infected. That's 1. 2, it's living on surfaces for weeks. 3, It's infectious without symptoms. So the young catch it, don't even know they have it, and spread it for weeks at a time. And it's airborne. It's not just someone coughing. It's if they're literally breathing in the same room for long enough, it'll float around for 3 hours. So there's a reason why China has taken the actions they've taken to deal with this. And it was step one. It was not a 15-day half-assed shutdown. It was really a hardcore. I mean, I've got photos of people getting hung who weren't staying in their quarantine. I've got videos of Chinese police barricading entire apartment complexes shut. And they're all wearing masks. Here'll be here's when we don't need to wear masks. When the CCP holds their big meeting, which has something like a few 100,000 of the top communist leaders, when they hold that meeting and they're not wearing masks, that's when it's safe to not wear masks. Until then, that's really the way it's going to yeah, Wes, I'm afraid this is really based on facts, not on opinions. Ulet wants to know, why would the US have more than China sick and dead? Well, again, China did a 60-day extreme lockdown, and now they're all wearing masks. So that's the answer to that. Mike says, when are you recommending to get into those trades? Immediately. Yeah, right now. And again, this gives us protection for 2 years. Dee says, why is Trump saying Easter in a press briefing? I think he's just trying to give people some hope. Either that or he's totally clueless. Maybe it's because Jesus was reborn on Easter, so he hopes America will be reborn on Easter. I don't know. Yeah, it doesn't matter. The stimulus plan doesn't matter. The stimulus plan is not going to help stocks. It's really going to increase the load on the bond market, and it's going to force resources to go to the bond market. So that's really the big picture, is that I believe there's limited resources in an economy, that our economy is going to have a slowed economic output, not an increased economic output. So you want to own stocks if the economy's output is increasing, which normally it does over time. We have more people, better technology, greater efficiencies. We're going through a period where we're going to have the opposite. We're going to have reduced economic output, and we're going to have to push resources into the bond market. So you can't have two things go up at the same time when you're decreasing your efficiency of your economy. Kathy Crickman says, if you're coming in with 75,000 today after buying the SPY, should the rest be in cash? Well, that's a good question. It depends if you're in the pro or the basic. So if you're in the pro, then I think you know what to do. You should have a huge position in the TLT and a decent position in the gold miners, protected with the puts. Looks like Murray says, looks like the Democrats are pushing Como to replace Biden. Wow. I really don't like Biden, so that'll be interesting. Good input, Murray. Jeff Stone says, thanks. DD says, the power supply industries have been designated by Homeland Security as essential businesses and started receiving road passes. Yeah, a lot of people have road passes now who are in industries. So that would indicate that the government's planning to outlaw driving around pretty soon. And that's why they're getting everybody who needs those passes, the passes, when it's not part of the law yet. Wes doesn't want to think we're in trouble. So do this, Wes. Write down how many deaths are United States today. I think it's like 850. And I want you to report personally, Wes. This is your new assignment since you want to call me out live on the webinar. Here's what I want you to do, Wes. I want you to track the deaths per day and the total deaths in the United States and report it to us each webinar. And let's see if your opinion changes within the next 7 to 14 days. Okay, Mike B, your puts. What do I, okay, so, okay, he's new to all this. So yeah, let me go down to, okay, great question, Mike B. So the strike is in each screenshot. Now there's two types of options. You can either basically be the lender, which is the underwriter. You're like the bank, which we don't want to do, or you can be the borrower. So the borrower has to put up collateral for the loan. And so we're essentially taking out loans against big banks who are brave enough to sell these puts, expecting that we can derive large profits. So we want to buy to open. And that's one option contract per 75,000 you're following in our program. So if I scroll back up. Josh says he's got a cheat code for economic output. That's funny. Yeah, Grand Theft Auto is the one that reminds me. I forgot what the code was, so you could go get $1 million and go wild. Papu says SPY is up to 251. Should we buy more puts? No, I think this is a good setup right here. So I wouldn't increase my risk at this point. Just hang on to your horses. We got our TLT doing its job, and okay, Michael Seebeck says I did not enter the silver position. Can you comment if this is the session to discuss it in? No, that would be on our Thursday bootcamp webinar, but that's still a good trade. Here's where it's up like 50% right now, so it's just barely getting started. So I still like that trade. Karen says, here comes Kumo. Oh dear. So yeah, the bonus trades in the bootcamp are really doing well right now. You can see, despite our puts having some drawdown, the bootcamp folks are still up 2.5% in March, while our pro members are essentially flat. Tony says, am I going to allow the call? No, I'll probably sell those the Thursday of expiration for each call, Tony. And then when I re-enter the GLD, call options will go for longer duration, is what I expect. Josh says, I thought masks proved to be ineffective for prevention. My understanding is the masks are to prevent sick people from infecting others. Well, that's what the government says, because they were idiots and they don't even have enough. They don't even have enough masks for the doctors, much less the nurses or everyone else. Meanwhile, all of Asia is wearing a mask. I mean, all of Asia, every single one. If you want to know how to get out of this mess, look at what China, I mean, they're more experienced with dealing with these sort of problems as well. But yeah, the masks, they block your ability to breathe in the virus. I mean, it's really simple. Now, it does also block you from breathing it onto other people. But yeah, the real strategy that will solve the problem is more like a 60-day shutdown and then reemerge with masks for at least a year. And I think you'll really kill the virus will stop finding hosts to grow in, and everyone who had it will either die or have immunity and stop spreading it. So how long will it take for the world to get to that point? Probably quite some time. That's why our puts have so much time premium, is that I do anticipate this is not something society is willing to do so quickly. Now, China, they rolled this out on the fly. Man, they had this planned out. Tony Colin says, what's your EEM play? Yeah, so we have a put option on emerging markets that's up considerably. Let's see. Not as much today, but again, I think this bounce is, again, short-lived. So this is one of our Thursday plays. We put this out February 20th, expires May 15th. I think that one strategy America will use to help fund the deficit, which is going to be massive. Think about it, we're cutting down tax receipts. We're going to have massive unemployment. We're going to have most industries really on life support. So the deficit is just going to blow out of proportion right here. So what's the government's favorite solution to help sell its debt? Go wreak havoc on other economies so we can pull resources out of the rest of the world and not just fund it all internally. So I do expect that we will see, right. Oh, thanks, Ryan. So yeah, I think we're going to see first America has to deal with this blow, recuperate, and then they're going to go start probably attacking, maybe not with bombs, but financial attacks against China, Iran, and Russia, I think will be the three key targets. So EEM puts, what are neat about those is that it has exposure to the whole area and not just China. But I could easily see restrictions to capital going to China, period. The special status of Hong Kong being revoked. Lots of their top companies having sanctions, all sorts of things like that, just to start. So I like being short Chinese equities, even though they're dealing with this crisis. We got to realize these products that we trade are still owned by U.S. financial systems. And they're just kind of like a broad proxy into their markets. So they could prop up their stock market all they want. But if we start making sanctions against their assets, I think there's still a lot of downturn ahead for Chinese equities specifically. And the bottom line is China knew about this in November. They threw the doctors in jail who tried to blow the whistle. Then they went and threw massive parties in Wuhan for the public, very well knowing exactly what's going on, and then waited till January 22nd to start ringing the alarm bells. And then massively underwent this extreme operation to deal with it, and it worked. You know, they did show the world, you know, I don't trust what China says, I trust what they do, okay? And so what they did worked. They really dealt a huge financial blow to America. And then they were able to quickly deal with the disease locally. And they did it with a 60-day shutdown and getting everybody to wear masks. Wes says he wants to not count New York data. But you got to realize the New Yorkers have already fled like rats all over America. So sure, whatever data point you want, Wes, you pick the data point and report to us the increase in daily deaths per day. And we'll see if you still think that we don't have a big problem on our hand. Jose wants to see the buy and hold. Yes, sir. The buy and hold is down 2% for the year. We're winning on our gold and our TLT. We're losing on our short equity positions. But again, I think we need a little time on our side for that. Not a lot, just a little. Let me review how that's positioned real quick. So on Monday, we did optimize this. And now this is based on per 1,000. This is how I have our portfolio allocated. So we're losing today and yesterday on these three, and we're winning on these two. We still have some cash on the side. I'd probably put this cash to work in the short term on the next dip on GDX. So I do think I think we're going to see this kind of pattern where every time gold gets too hot and starts to attract too much capital, the central banks try to kind of put it out like a fire. And all they have to do is just sell some gold. Now, I think the longer they do that, it's just going to gradually take assets out of their hands and put it into long-term holders. Because you know, with oil cheap and money printing at all-time highs, and it's not hard to predict that gold value goes up over time. So there's our allocation currently, Jose, for buy and hold. Papu says, do you think it's a good idea to buy Disney puts? I think Disney's pretty screwed for sure. I'm not doing it in my portfolio. But yeah, I think Disney's one of the most, because I think something like 2/3 of their business revolves around movie ticket sales and selling the attractions. But again, I have enough. I think the whole SP 500 is going down, so I prefer to trade the more liquid product and be more macro. But if you wanted to take a dabble at that, I don't think it's a bad idea. But again, I won't be issuing any buy or sells on that. Okay, Mike B, and I took the puts. Mike B is down on the puts. So yeah, let's see. Let's talk about what happened. Friday, we took the puts. Market started to tank. In the futures market, we were at limit down, and then we had sort of this. We had, what do we have this week? We had 6 trillion in stimulus. The Fed is essentially lent money to every sector under the sun. Remember, the more money the Fed has to lend out, the worse the situation really is. We had Bill Ackman, a bunch of hedge funds, Jeffrey Gundlach come out and tell everybody they think it's going to be the bottoms is in, and that America's going to deal with this. And there's this private meeting with the hedge funds. I don't know what they got promised, probably guaranteed no loss.
And Mike B, so yeah, the value today is a better entry, obviously. So yeah, if you're not in them from Friday's alert, yes, today is certainly a better entry point. That was kind of the bottom part of his question, Jay.
Okay, yeah. So today's, if you don't have the position yet, you can get in for less than I did, and I don't think time's on your side. So I would definitely get that as soon as possible, personally. Okay, Karen said, did you see that the rates went negative? Do you think that will bleed over to longer? Yeah, so I think the 2-year went negative for a little bit. Yeah, the big picture is the problem can't be solved in the private sector. It's too big for the banks. So we got to raise capital at the government level. Okay, trillions of dollars. The people financing this trillions in debt aren't going to lose money. The only way they don't lose money is if yields go lower. End of story. So yes, I think the bond market is the best place to park our cash right now by far. Any volatility in the stock market, I would say, is noise. It's insiders trying to get out. They're using the media to try to trick everybody they can. You know, think about it. Who's the first person told you not to sell? Warren Buffett, the very top. Who told you not to sell in the 2008 crisis? Bill Gates and Warren Buffett sitting there at the town hall meeting. So they're going to do everything they can to slow the stock market crash. Nobody wants the stock market to crash. But I think the surefire money is in the bond market. Can yields go up for a short time? It could, but that would cause even more people to want to sell their treasuries. We have like 12 trillion outstanding that's not held in the United States. So I think they're very incentivized to not let yields rise. Okay, Josh says, sanction Venezuela, largest oil producer, regime change in Afghanistan, Iraq, Iran. Oh, he's talking about all the things we can do to help raise capital. Regime change in Bolivia. Yeah. If we don't spend 50% of our taxes on military for nothing. Yeah. So America will put that military to work and help raise money for the government's massive debts it will be issuing. Yeah, we'll see how the market does when unemployment claims jump 100-fold tomorrow and continue to do so every week. And as the $2,400 stimulus they sent you runs out and nothing's open by Easter.
Yeah, Jason, I was reading on Friday in New York, they had 250,000 claims in a single day.
Oh, God.
Yep, that was last Friday.
Okay, Doug says a pandemic is based on it being global. It is a pandemic by definition. How fast it spreads is a function with variables such as population density, age, health, but the point is that it'll spread and continue to spread at varying rates. Yep, it's like cancer. We really have no way to stop it. The reason this is so much different than anything else we've dealt with is because it's not because of its high mortality rate, although it may have a pretty high mortality rate with anyone with who's has high blood pressure. Seems to be a pretty bad indicator, which I think a huge percentage of Americans do. But it spreads without symptom, and there's no cure. So I mean, that's really the big thing, is it's affecting huge populations, percentages of populations. It's highly contagious. It's not deadly. That's actually makes the virus more powerful. If it was deadly, it would just kill the host and wouldn't spread. It would be easy to quarantine and isolate and identify. This one's the secret spreader, and there's a lot of things we can do to slow it down, but it won't stop it from growing right back. So until all of us have had it and developed the antibodies, this is a problem we can't really shake off outside of a 60-day lockdown and then wearing masks as we emerge back out. So until I see and again, we could do that let's say we did a 60-day lockdown in the United States and then we went back out without masks. Well, then some guy from India flies over here, has it, and reignites the whole problem. So there's no quick solution, I'm afraid. Julio says, in buy and hold, do I sell what I bought already and buy new shares according to instructions, or need to balance according to? Yeah, Julio. So I would just say per $1,000, here's what I should have, and keep it simple. So if you have more or less, then adjust. Okay, Varad says, with unlimited QE, how long do you think the Feds can keep the stock market from crashing? So the Fed is basically saying, we'll let you take the risk with a free loan. So there's a handful of people coming out saying, we'll take the risk, like Bill Ackman. I think that they probably have some sort of guarantee or some put options or something, some sort of sweetheart deal, because it's clearly like I said, we've watched the preview of the movie. The movie hasn't even begun yet. It's we're watching a little teaser before it starts right now with this 15-day fake lockdown. Mark Stoley says, why exclude New York? You know what, Mark, there's a lot of people just don't want to believe this is a pandemic that's growing daily. I've noticed that's a lot of people they want to think it's not a big deal. I'm not sure why. Stimulus was 2 trillion. Democrats wanted 6 trillion for Mark B. Yeah, I bet you it'll cost more than 2 trillion in short order. Tom J says, don't you think the U.S. intelligence agencies would have known the situation in China? Did they inform Trump? Yeah, I think that, here's what I think happened personally. I think that that some of this technology was developed in Canada, Harvard, North Carolina, that it was relative to the SARS virus, that the Chinese were giving these colleges and institutions tons of money and were secretly sneaking everything they could back to their lab in Wuhan. In Wuhan, I believe they were taking bats, which are mammals that learned how to fly. So they have this crazy immune system. And that's what fascinates all these scientists, not just in China, but all over the world. They've been studying bats for decades. And from what I can tell, this strand that's come out is unpredictable. So it's probably not engineered by hand. It doesn't look like anything we've ever seen. That's why it's novel. What could have happened is they sat there with a bunch of technicians and cultured them. So they grow these viruses in the bats, and they take the virus and go infect a bunch of other animals, see which virus was highly contagious and deadly. So actually with the virus, what's more interesting is to have one that's highly virulent without symptoms. That's really the killer. Who cares about the mortality rate? If the virus kills, then it can't spread. So it's actually economically more beneficial to have a higher mortality rate, and it stops the spread faster. So I think they sat there and there's a lot of articles saying they were actually doing this. Now, they're saying they're doing it to create vaccinations to fight things like AIDS and all sorts of diseases. But I think they sat there, they took all these crazy viruses from the bats who are immune, tried to find a virus that would kill the bat to understand why that would kill the bat, but other viruses wouldn't. I think they were trying to inject these viruses into lots of other animals, and they sat there and did it probably for the better part of the last 2 decades. And they probably have a whole chest full of these viruses. And then I believe it got out either on accident or on purpose. And it spread so rapidly by the time our intelligence realized what had happened. Tens of millions of people had already flown in and out of China, and there's no stopping it at that point, unless you went into this massive lockdown. So I believe government's been slowly but surely creating plans to deal with this as fast as they can, and baby stepping the public, tiptoeing. People are having a hard time coping with this new reality. Things are not going back to how they were anytime soon. So I expect that pretty soon Trump's gonna be like, oh, the data is not saying we're going to have church on Easter. Sorry, guys. In fact, we're going to have to go into a hardcore lockdown. That's what I hope happens. Okay, so Julio says basically buy 84% shares and keep 16% in cash. You got it. Good job. Mike B, thank you guys. New to options and need to make sure I feel comfortable placing calls and puts before I join. So our boot camp is a bonus, Mike, for 30 days. We meet twice, or we do a Tuesday update and a Thursday webinar. Thursday's training. It's about 2 hours of training every week, but you get access to all my modules, which there's some in-depth modules on options, which will really, it's about 4 hours of education so far, and there's a lot more to create. So I think you'll be quite comfortable trading options with the 30-day time you get in our boot camp. Michael Seebeck says, I got a put for 990. Good job. Donald Dickey, good morning. Jason, question, if we have surplus cash, should we reinvest in TLT? Yeah, so just keep the same strategy rolling. So if we got 40% allocation in the TLT, 10% in GDX with that married put, and then we have built this downside foundation for the future. So think of these put options as seeds that are going to grow as this crisis grows. So right now, you know, if you think the crisis is going to slow down and stop, then you would also think these put options would essentially die and lose value. Now, if you think the crisis is going to grow and spread, then I would anticipate our put options will also grow and spread in value. Okay, Wes says 40% of the cases are in New York City. So that's fine. Tony, and remember, Wes, all the data you have is 5 days old. They're delaying data by 5 days. Tony Colin says, what say you of the QQQ? Same thing as the puts going down. Tyler G, so what level offering do I need for option trades? What is that, Dean? Like level 2 for what we're doing? You might want to get level 3.
Yeah, it depends on the broker. Some of them are different, but yeah, easiest thing to do, Tyler, is just get all levels approved. That's the easiest thing.
Tyler, I do want to sell some puts against the healthcare biotech ETFs when we enter. It'll be a safer way to initially play those. So when the volatility is at like 100, 120 on the VIX, I intend to sell some puts that not only will have a huge monthly return, but if we get filled, we're going to be happy to pick up those stocks at a discount. So I would get the ability to sell options as well. We're not doing that today. We're buying options today. So you want to buy options when you think the VIX is at a relative low, and you want to sell options when you believe the VIX is at a relative high. So now 60 is the low. Funny, it used to be like 15 was pretty low. 12 was really low. We went through a decade of super low volatility. Now the new norm is 50 to 60 is really low. And I think 100 to 120 will be on the high end.
Nice. And just real quick too, Tyler, while we're kind of talking about that, guys, and just for the team here, the whole options approval process is really, in my mind, kind of designed to keep the small fish small. Okay, so you absolutely want to get any level of option approval you can get at all points. Okay, you know, that's Wall Street's way of engineering you to stay at a small account for the rest of your life. Don't let them do that to you. Okay.
Okay, let me take a look at some other stuff I wanted to show you guys, and then we'll have time for some open mic. Ron says, how long will the rally go for? I would say no more than 2 weeks max, but I think less. Okay, Tyler's wondering about our services. Sure, let me go over our services really quick, and then I'll go through some charts. Okay, so we have 4 products we sell. One's a buy and hold portfolio with no options, and that runs for $9.97 a year. We have the basic program, which meets Monday, Wednesday, Friday, and we play US equities exclusively. So right now that's those put options, but soon we'll be rotating into owning some healthcare, biotech, medical device, e-commerce, and I think military companies will be the benefactors of this debt. Timeline, probably more like 3 to 9 months before I expect it'll be the right timing. So I want to see the bond market start to really crash the stock market. So as the bond market starts pulling resources out of the economy, so far all they've done is draw up a plan for how much destruction they're going to pull out of the US stock market and other world markets, which is right now $6 trillion. So that money has to come from somewhere. So again, if you keep Main Street closed, which we're going to have to do, otherwise you're going to have deaths piling up everywhere, and you keep Wall Street open, Wall Street's not going to fare well. This is the program that's ideal if you have between 30 and 75,000, and it costs 2,000 a year. Again, all these advisories come with a bonus into our boot camp for 30 days where I'll teach you options. If you do the pro system, that's really good if you have 75,000 or more. Most people in this have hundreds of thousands or millions of dollars. I don't think we have anybody with tens of millions yet, but you never know. Those folks are usually pretty quiet. And this one will get you allocated into more than just US equities. So we'll have the US bond market. We'll be shorting China's stock market. We'll be playing the precious metals market and other commodities when the time is right, like oil and gas, which I think will be probably one of the best buys in history at some point as Russia continues to try to crash the oil market. And then the final product we have is a boot camp. Now that's a one-time purchase and it's a lifetime access that meets every Thursday after our pro webinar for about 2 hours. And the content changes every week. Sometimes it's options lessons. Sometimes it's futures lessons. Sometimes it's Forex lessons. It tends to focus on what you need to know at this very moment in time to get the most out of everything we're doing. And it also has some bonus trades, which are aiming for more like 10,000% returns with small amounts of capital, which we currently have a QQQ trade on that's up significantly, and a long silver leap option that's up significantly as well. So that's a free bonus for 30 days if you do get any of these services. If you go straight for the boot camp, you get a year of the pro portfolio for free. So that's a good deal as well. Okay, great, Tyler. Yeah, and Dean can give you some payment plans and stuff too if you need help. So, Ron says Google dead cat bounce. Yeah, it's just it's not going to last, guys. Just the stimulus plan they've passed is going to crash the stock market. Forget all the deaths that are going to be piling up. So I'd give it at most a month. Okay, let me look at some charts and then we'll go into some other Q&A and some news. Okay, so here is SPY TLT. So this line right here is your SPY. Here's your TLT. We've been predicting they would cross way back here. And sure enough, they've crossed. My expectation is this will overshoot as long as we have to create large deficits. So again, it's not a video game with a cheat code. You can't just make both markets go up. If you're going to reduce economic output, close down shops, and lend people money, and then also say they can't buy back their own stocks, then it's going to be difficult for the stock market to stay alive. Now, the best news for the stock market was really the Fed buying up corporate bonds. So that has given a lot of corporations more liquidity to buy their own stocks. That's really the only positive thing we have going for stocks at this time. Every so often, people who've sold puts are forced to cover. When they cover, they have to buy the stock. And then the big question is, will they hold it or are they going to let it go? And so I think as unemployment rises, as the lockdown clearly won't be 2 weeks and turns into months, that there will be more and more pain in the stock market. Also, we have to draw resources into the bond market, which will come at the cost of other markets. So I do think this will be advertising revenues dropping. Yeah, so a lot of Facebook and Google's revenue are all these local companies. So everybody's just shutting down and conserving resources. People are going to start selling stocks to just pay for their costs. Now, the government's doing everything they can to try to reduce the pain. They're making so you don't have to pay your mortgage, you don't have to pay any of your bills, all this sort of stuff. They're backstopping the corporate bond market. So it's not like they're not trying. But the bottom line is that the bond market has to come up with $2 trillion, and that's going to punish other markets. There's just no way around it.
Hey, Jason, just real quick, bud, while you have the screen up here, and just to give some color for new people. So the top, I guess, line you see is the S&P 500. Okay, and the bottom solid line is the TLT ETF. So just wanted to quickly clarify that, Jason, just if they didn't, if they were new, that would help.
Oh, very good, very good. So here's the 2 price points. Here's a little bit longer look. Now that would be wild if this crosses just on a price point base. It probably will, unfortunately. We were looking at a percent change basis that it was crossed. So yeah, the bond market's sucking money out of the stock market. That's really the big picture. And it hasn't even actually, right now it's just anticipating it's going to do that. Yeah, so all my short positions are a better buy today than they were yesterday because we had, I think, one of the top 5 jumps in the stock market of all time. So certainly, if you believe my analysis is correct, then all of the short bets on the stock market are a better deal today than they were yesterday or the day prior. Okay, so that's one chart. Let me go to this scale. Let's go to monthly. Okay, so stock market has a long ways to go. I think it's going to, I think we're going to see the Fed break down and buy stocks somewhere in this area. And that'll finally be the bottom. I don't think it's going to jump up at that point. I just don't think it'll crash much more than that before the Fed.
Has that happened in history, Jason?
Not with our Fed. The Japan and Europe buy their own stocks.
Okay. Right. I just, I was like, you know what? I don't know. I was like, I'm pretty sure that that's never been the case here, but I figured I'd ask. Awesome.
They're buying everything else so far. So it just shows you how bad the problems are. Now, what's the problem with buying stocks while the volatility is up? It makes the cost to have downside protection really expensive. So if I wanted to buy a stock today and buy downside protection, the premium on that, I'm taking at least a 10 to 20% risk on the underlying asset for a very short amount of insurance, betting that this is all going to blow over and it's not a big deal. So it's really not a good buy right now with volatility so high. Okay, so that's the big picture. I think there's a lot more downside, and that this really the solution again is 60-day global lockdown, and everybody reemerges with masks, and in a year, you won't even be thinking about this disease. Until that happens, it's going to keep growing, and there's no way about it. We can go on and off, but it's not going to stop the spread. So that's bottom line in that market. Now I have the biggest bond markets in the world up in their rates. So we're looking at let me fix this one. There she blows. Okay. All right, so we're looking at the 30-year bond for government bonds. The candlestick chart that's green and red is the US 30-year product. And it's about to have a lot more supply. So the biggest risk to this product currently, I would say, is that the quantity is likely to go from, right now it's about an $800 billion asset. That's just like the premier debt product in the world. Fought over, and you can see the yield's been crashing. But the supply side for this is about to jump, and they're going to probably, I guess they're just having technical issues at this point, but they want to add a 50 and 100-year. So the TLT is going to have a much larger asset under management, and the duration, which is really the leverage. So a 30-year treasury is something like owning 30 times the leverage of a 1-year. We like to look at what the front end of the curve is doing to predict where this will travel in the future. So we can see they've just stomped the short-term debt to zero. And the curve it looks nice. I mean, this is a good curve. Too bad it's completely fake because the Fed's buying $125 billion a day between mortgage-backed securities and treasuries. And that's not going to stop. It's probably going to have to grow. That's promised through this week. Okay, so back to, here's our competitors. Who else is trying to sell debt that has a good economy to pay the interest on that? Well, everybody knows the German bond, which had negative yielding debt for a while. Now, I've usually used the German 30-year as a good leading indicator because I thought the biggest problem was China. But now you got to ask yourself, is China dealing with this crisis better than other parts of the world like America? I have to say right now, yes. Now, are they going to likely be punished by the US? Probably so. I think we can still use the German 30 years an indication as to how low yields could possibly go. But right now, you can see the US 30-year has dropped its yield, which means that bond value has gone up at a faster pace relative to its peers as of recently. We also have some other bond markets to keep an eye on: France, Italy, China, and Germany. So those are really your core sovereign bond markets to watch. And outside of China, which we can see is this light purple, you can see all of them are dropping, but China's is kind of flat, or even pointing up, which is very interesting. So China chose to essentially, well, they've dealt with this. They're not going to finance trillions of dollars to try to save everyone. If you watch what they did, they basically just locked you in your house and you either made it or you didn't. And now you have to wear a mask. So their cost to deal with the crisis was significantly less than what Western civilization is going to spend on it. And I think their play here is that they believe that they can bankrupt all these different democracies who will go spend every penny they have trying to save everyone, and essentially ruin the value of their currencies. So I think that the end game here is they want to crash the dollar and emerge as a leader, is the leader. So I think that's the end game. When I was United States going to go allow that to happen without a fight, I doubt it. So I think we'll see retaliation in short order. Now, so far, phase one deal made the first purchase, which is what, 4 months late. Who knows how much. China clearly covered this up. They clearly allowed massive parties to go on in Wuhan, sponsored by the government, to allow it to spread rapidly. It seems as though this was spread right before their New Year holiday, which they know is the single highest traffic point. So if you think about all the planes going in and out of China, it's an unstoppable attack. We worry about nuclear war. Well, now we have this invisible demon that's virtually impossible to stop. And it's putting 2 out of 10 people who get it into a hospital. And it's infecting 8 out of 10 people that are exposed to it. So I can't think of a more beautiful attack. At the same time, Russia goes and crashes the oil market, which we're about to look at. So this will again be, let me take it off of the percentage of change. So let's see, this German one is, back to negative territory, wow. So really our question is how low can this yield go? That's when we would say the TLT hits a maximum profit. I think last time we got to 1% and it was 180 TLT. And that should have gone even lower, but the stock market had crashed so hard that people who had treasuries had to sell them to cover their margin calls because they lost so much in the oil market and in the equity markets. So we lost that profit opportunity. But I think not only will we be back at the 1% yield, we're going to have to go far lower. And so it's really in the bank's best interest to make the yield slowly drop for the entire duration that we have to blow out our deficit. So as long as we have to spend more money than the US government makes and increase that, they need to make sure that the bond buyers make money. And again, if inflation is targeting 2%, probably going to blow past that, then you definitely don't want to make 1 and 1.39 for 30 years. You're basically losing 60 basis points. So the only people buying these treasuries at all are going to be really insiders who understand the system. And that's that you buy these bonds and you flip them to the Fed. And the longer you hold, the more money you make. And this works so long as the government has to create deficits. So probably going to have $3, $4, $5 trillion per year deficit for at least a few years. So that's very bad news for stock market and very good news for anyone who understands how this mechanism works. And again, the bottom line about how this works, this is really important that everybody understands this. This is what we call the life cycle of the bond market. So this is how the government deals with crises that private sector can't deal with itself. So normally a bank sees a troubled company and they go in there and they say, hey, we'll loan you money. And if you can't pay the money, that's fine. We're going to take over equity in your company. And so they can go find good companies that have had a crisis that they did not expect and plan for. And then all of a sudden they can come in there and take advantage of it. They'll go issue a big loan, cures the problem. But at the end of the day, the bank either makes a very lucrative yield for a long time to come, or they end up owning a huge chunk of that company. So that's what's happening on a grand scale right now. Many, many companies are not able to operate if the economy is shut down. So it's just so massive that no single bank could deal with this. So we're going to do it as just one gigantic bank. So the United States is acting as a gigantic bank and financing all of this. So here's the game plan for how we deal with stock crashes. Okay, so first we have to realize that there's a problem that's so large that we can't deal with it in the private banking sector. Okay, so we're going to raise the money through the bond market. So what do? The first thing they do is they drop interest rates considerably, way below the yield of the current bond yield. So in this case, they drop the federal fund rate to 0, allowing the primary banks, let me zoom in on this so we can all read it. Okay, so step 1, we drop the interest rate for primary dealers, that's JP Morgan, all the big banks, there's like 20 of them, to 0. So they can borrow for basically free. Okay, and that yield, or that cost basis for primary dealers to borrow, has to be less than what they're going to get paid on the Treasury yield. Okay, which right now is anywhere from 0 to 1.4. So they can borrow for free and buy up a Treasury. So they're making money for free. Who's not going to do that? Unless you thought the government wasn't going to be able to pay the loan off. So that's step 1. Step 2, the primary dealer buys the US Treasuries. They have first access to it and actually legally have to buy all the debt we sell. So unless you want to bankrupt the banks, you got to give them cash to buy up all this debt coming in. And their balance sheets cannot handle $2 trillion of new debt, period. So they borrow from the Fed for 0. They buy the US Treasury for some yield. Doesn't really matter. They don't mind the yield. It's not like they're losing money with the yield. But now their balance sheet is hogged up. So what are they going to do? They're going to lend that Treasury back to the Fed through the repo market. And in return, they're going to get cash. So they're taking free money from the Fed. They're buying up a positive yielding US Treasury for a profit, guaranteed profit there, can't lose. Then they're going to go ahead and put the Treasury back into the Fed's hands through the repo market, take on dollars at a low interest rate. And then they're going to turn around and lend those dollars to the broker dealers. Now, who do the broker dealers lend to? Well, they lend to hedge funds like Ray Dalio, mom and pops, anybody. So that's where you get some benefits for the stock market. And at the same time, you're going to fund the government. So it's really helping the whole system with this process. Now, what's the cost? Well, we're going to have a lot of debt for US citizens to pay off for all of eternity. Okay, as all of this is happening, the Fed is also using quantitative easing to permanently retire any bonds which are aggressively sold that could result in bondholders showing a loss in their position. So usually they do the QE after the rate cuts and all the money's been raised. But this time around, people are having such huge losses because they're so leveraged and overextended in these different markets that they're having to sell their treasuries to stay alive. So now the Fed's doing rate cuts and QE at the same time. So there's essentially a Fed put in the treasury market where they will buy any spikes in yield so that it doesn't cause everyone to sell at once. So the worst case for this position would be, again, China and all its allies trying to get everybody to sell at once. We're already seeing commentary where China is threatening to do that, although they need dollars more than anybody else. So I'm not sure if they would. And so this becomes a self-fulfilling prophecy, which over time drives bond yields lower. So they have a free pass to make money in every step of that process. So that's why dropping rates to zero is much more bullish for bonds than it is for stocks. Now, does it help corporations? Sure, because you're getting all this extra cash into the system. The real loser in this will be the value of the dollar as it escapes out of these different asset bubbles. Okay, so we're looking at the core bond markets. The lower they go, the lower we could anticipate our yields going. For now, short-term major profit target will be as we approach 1. I go back to the Pavlov dog example. Last time we got to 1 on the 30-year. At the same time, stocks were just tanking unbelievably, and oil had dropped unbelievably, and it caused a lot of margin calls. So I'll be weary as we approach the 1% yield this time to take some profits. So that's something for the pro members primarily. With that, here's a look at emerging markets. Okay, so in this chart, we have EEM is the candlestick. We have FXI, that's your large cap Chinese companies. And then we have South Korea in purple and the US SPY in turquoise. So interesting, China is outperforming everyone in their markets. Will that be allowed to last? I doubt it. I doubt it. Nobody trusts their data. So just interesting. It's showing that so far they've done a better job at protecting their market, which has much less capitalization. They've done a better job getting back to work. And I think they may start withholding supply chains from the United States, and the United States is going to have to react. So interesting chart, really doesn't change anything we're playing there in our market. Here's a look at the precious metals market. So in this one, we're looking at spot gold is the candlestick, which again is a fractional reserve strategy. So it has like 1/10 of the real assets, so it's leveraged. And then it's well known that JP Morgan and HSBC Bank have a short position against the gold market. So the central banks, I think their basic strategy is let spot gold rally up, attract a lot of people like to buy things on the way up or as they're breaking into new highs. So I think that's going to be the gold trap for quite some time. And so I'd expect every time we get to really sexy levels on gold, it looks like we're about to break into new highs and all this money stimulus is going to be the best thing for gold miners. I could see the central banks dumping gold, causing all those weekends to sell. The short position makes these banks a ton of money. I mean, JP Morgan's had people go to jail over this already. So it's well known that they like to manipulate this market. And it's a 10 times leveraged ETF GLD. So I think that's a pattern we can expect, is to see every time it breaks to a new high, they'll dump it. I bet the lows, I bet we continue to see higher lows and higher peaks, but I still think they're going to do everything they can to manipulate this market. So let's see what we got here. We got spot gold, and this is a percent change relative chart. GDX is our gold miners. So the market cap on gold miners is tiny compared to the market cap on spot gold, but they're less influenced by the central bank. So I really like owning gold miners, and I think they have a great business model for the next several years. They're going to make a ton of money with cheap oil and high prices on spot. So in our pro program, I'm tempted to do really far of the money leap options on GLD, especially when there's sell-offs. And again, I think once we've completed raising all the money in the bond market, that's when gold may be allowed to let loose and really take off. But right now, all the energy has to go to funding these governments. So I'd be suspicious of getting overly weighted in any kind of gold product yet. Although we're seeing some nice runs in GDX the last 2 days, certainly. And now GDX is at almost 27. So that's really good for everybody who has that position. Good job. Silver got punished. Same thing. Silver miners will go broke if silver doesn't get, I think, above something like 15 and stay above there. So that makes me inclined to like to play spot silver, because if these central banks punish the silver miners to the point that they have to shut down mines, then the supply of silver gets cut off, and the next big push into precious metals, the ratio of silver to gold was at an all-time high. Now that's starting to take off and get back off those lows. But you can see right now, spot gold is leading the way. Gold miners are in second place. Spot silver is in third place, and the S&P 500 is, despite this big, massive rally, is still way behind and losing at a faster pace.
Hey, Jason, a couple of things real quick. Bill Taylor has his hand up, and Dan O'Connell says, will you be able to get us ready for that?
Yeah, so we have a leap option on SLV already. So that's the position you want for that. That's part of the boot camp. So I think you have that, right? And yeah, let me get through all if you guys have questions for now, just post in the chat box. As soon as I get through all the chats, I will. Spice says, you mentioned buying leaps on GLD on a pullback. I heard you say you did not like GLD because of manipulation by the banks. Correct. So it's that's why I would do call options on GLD and not own the underlying asset. So I prefer to own an asset where it's a real company making real profits, not some sort of leveraged fractional reserve bullshit. As far as just taking a small bet and trying to leverage it, then the call option market's really, really nice for that. So GDX is primarily American Canadian companies that have real businesses, and they're printing money at faster pace than ever before in history for them, and will for quite some time. Now, I think eventually GLD, it's going to cost them a lot to keep suppressing the price. So I think over time, we're going to see some of those big shoot ups in GLD, followed by big crashes. So I think there's going to be a lot of volatility. And now with the underlying asset disappear, that's another reason why I don't want to own that. I think you're going to have less volatility in GDX and big swings in value in the spot. Josh says, is there somewhere where I can find all the positions in one place? Yeah, so for the Pro program, the Thursday update really does that every Thursday, just really walks through your total allocation. So I'd look at last Thursday's update or tomorrow's. And if you're in buy and hold, yeah, we're about to look at oil market, Florian. Yeah, so if you're in the buy and hold, here's your summary. If you're in the Pro, then you really want to look at the update from Thursday, which I'll cover tomorrow. So, okay, let's look at some currencies now. Okay, so in this we have the dollar index, which is the dollar against a basket of currencies, which has a lot of exposure to some of those emerging markets. Then we have China's currency against the dollar, the yen, the euro, and the Aussie dollar. And so you can see, even though the Fed's printing $4 trillion, pumping money, it's basically the whole world got into a margin call with that crash, caught everyone off guard, over leveraged. Everybody's trying to convert into dollars at the same time. So there's a huge shortage of dollars. And as long as this persists, it's detrimental to stock markets, just worldwide. So we can see all of these currencies are crashing in value against the dollar, despite the Fed doing everything they can to weaken the dollar, from cutting rates to zero, giving free money to every market there is, and the government also signaling that they're going to dilute the value of the dollar through $2 trillion stimulus plan. And that's just a start. I bet you we'll just see how much money these guys can dream up of giving away here. But what's funny is it doesn't solve the way to solve this is not diluting the dollar. That might help slow down the crash. It's kind of like one of those movies where you're trying to go back in time and change the outcome, but the outcome's always the same. The fastest way to deal with this, again, would be worldwide shutdown for 30 to 60 days. I would lean towards 60, and the whole world emerges with masks. You'll stop this in 60 days or less. If you don't do that, this is just a long, drawn out. And where's all the masks? We don't have any masks. That's why they're telling everybody in the United States, oh, don't wear a mask. Save those for the doctor. Well, because we don't have enough masks. So all the currency is getting punished. If you want to plan a trip to Australia, your buying power is essentially twice what it was. So you can go have a heyday. So they're going to have runaway inflation in all these countries where their currencies are devaluing. So it's a total nightmare. To be bullish on stocks, we really want to see that dollar weakening, not strengthening. So that's, again, good news for treasuries, because now your bonds yield is gaining in relative value against your local currency. Plus, you can anticipate that the Fed will buy it from you for a profit later down the road. Okay, let's look at the oil. Let's look at some energy markets. This is really, I believe, what caused the whole crisis in the first place. Let's go to just not the percentage basis. So this drop in oil from 60 to 24, as low as 20, that's what I think really, at the same time, so we have this, we haven't even felt the effects of the lockdown and of this really hitting a high percentage of society. But this caught a lot of people off guard. It's bankrupting a lot of companies, a lot of people who are selling puts against oil in the futures market, or essentially that same strategy, hit margin calls, and they got wiped out. So as long as oil's this cheap, that's another very, very bad sign for equities. And the same is true for, we have natural gas in orange. It's hard to see that. Let me zoom in on that. So natural gas, I mean, this is just going to put everybody out of business. Went from $5 to $1.50. Oh. Here's United States oil companies crashing from 13 to 5. And then we have UNG, that's your United States gas companies, crashing from as high as 37 down to 13. Oh my God. So yeah, in our pro program, I absolutely positively want to buy these, but not until some of the same, I need to see that we're taking the steps that are proven to cure the ailment. And I'm afraid printing money does absolutely zero to cure the problem. Now, if they said they're making, what do we need? We need like, if everybody's gonna have 10 masks, we need 10 billion masks. We have something like a few million. So we've got about 0.1% of the masks we need to solve this crisis. So unfortunately, I think oil goes lower. And I think the next big leg down is really going to get people. And that's when we pop that VIX above 120. So no signs of recovery there. And again, I can't wait to buy these, but I don't think we're at a bottom yet. Not even close. So especially when you assume that this was not a big accident, that this was all done by design, and that we're entering a war. Now, why am I so confident that this was done on purpose? Well, phase 2 would have been like declawing the cat or clipping the wings on the bird. Okay, phase 2 was not going to work for China. Okay, they were not going to do phase 2. No way. And phase 2 basically meant no more subsidizing or nationalizing key industry. That's China's whole strategy. That's how they're going to become number one, is they believe the power of the whole of the community will be greater than having what democracies use, which is having all these little companies that are fighting and trying to outperform one another. So they want to have a single unit instead of a bunch of individual units. And so we'll see which system works better. Bottom line is, I do anticipate that this was on purpose. Russia is crashing the oil market on purpose, and their end game is to try to ruin the value of the dollar by forcing us to finance gigantic deficits to try to pay for this. And it's working, everything's working. So here's another thing I like to look at. They call it Dr. Copper. A lot of people like to look at the gold copper ratio. If copper's going down and gold's going up, usually treasuries gain in value and yields go down. And so that's happening. This is the gold copper ratio, and you can see it's just crashing. So at some point, buying copper related stocks or futures will be a really good deal, as well as all these other assets that are just getting massively sold off, but not yet. Okay, let's look at some stuff I've highlighted over at Twitter. Okay, I like this long view fellow. He's not always right, but he's pretty good. He was one of the folks who had underestimated the disease spreading and kept telling everybody buy, 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 and it just tanked so hard. Now he's really switched his tune. So I have found that he's really, really insightful. Buy bonds, not stonks. So the Fed's basically backstopping two asset classes. One that are interesting. One is the US Treasury, which I believe needs to get the most money and will probably dominate asset classes for the foreseeable future in terms of low volatility, high return. But then two, they're also backstopping the corporate bond market, at least the high grade portion of it. So that's going to allow the top companies not to take the stimulus from the government. So they won't have these rules that they can't buy back their own stocks. So that's really your only buyer right now is going to be these top of the line S&P 500 companies. You're going to be able to continue borrowing in the corporate bond market and continue buying their stocks because they don't care necessarily if corporation has a loss, if they can continue to get easy access to capital. And so as long as investors believe they can get a decent yield from corporate bonds and that the Fed is going to guarantee that, then I can see some pretty good money going into there. The downside is the same people taking advantage of this are insiders who are trying to sell their shares and get out of the way. And at the same time, Main Street is going to be unemployed, broke, and selling stocks to stay alive. So I think the overwhelming force will be selling and not buying of equities. A guy I follow for Macro Voices, Eric Tamsin, he's a funny guy. He does great interviews with really, really top-notch folks. I definitely recommend following his YouTube channel. He's convinced he has a coronavirus. He's a character. He's been tracking this for quite some time, has some good content out there. A lot of people are wondering, do we all already have it? There's some report that came out saying, oh, maybe 50% of the United Kingdom already has it. My best guess is that if I'm thinking probably 1 in 10,000 Americans has it right now. So it's just barely starting to spread. So we're so early on the pathway to herd immunity or anything of that nature. Best way to have a canary in the coal mine is to watch. Now they're trying to guard these as best as they can, but again, it's just impossible. Is watch the retirement homes who have 80-plus-year-olds. Unfortunately, they will be the first to pass away from this at a much quicker pace. So they'll start developing the pneumonia, and they'll start having respiratory failure or heart attacks from this much faster than the general populace. So that's your best leading indicator to anticipate if it's really, has the angel of death hovered your town? Well, that would be the best leading indicator that would show you that. Right now, I think 1 in 1,000 in New York has it, and probably 1 in 10,000 in the United States has it, and that will slow down with the current 15-day lockdown, or whatever you want to call it. It's like a, we trust you lockdown. It's not what really works. What really works is much more draconian measures, unfortunately. So I wouldn't think you've already had it and that you're immune. Now they are going to roll out some tests so you could find that out, which will be really neat because we could slowly getting people who realize they are immune and get back to work. That's great. Relieve a lot of panic. But again, until we have like 20, 30, 40% of the population who has developed those antibodies, the panic's not here yet. Now they're talking about more actions, more stimulus. Initial unemployment claims comes out tomorrow. The median forecast is 1.5 million. The high forecast is 4 million. So that's just going to be a huge, wow, look at that spike. That'll be the biggest spike in history for weekly initial claims. So will the stimulus plan slow that down a little bit? Probably, but I just see every day more and more people saying, "Oh, I'm laid off. I'm unemployed," on Facebook. And that's obviously anecdotal. But yeah, tomorrow we'll see, can the stock market handle this print? Polls now show 60% of the public approves Trump's handling of the crisis. This is now reflected in his approval rating. So what's Trump going to do? That's a big question. I don't think he's going to let it rage through society, because if it really infects 8 out of 10, we're looking, and somehow we just hide all the older people for the next 2 years. Hopefully that, but who's going to take care of them? Younger people take care of them. Those younger people are exposed. So really the solution is we all got to wear masks and we got to kill the virus for 60 days. That's really the solution. So I think Trump will have to do something of that nature in the near future, and that he'll come out very popular for it. We're already seeing his approval ratings go up now that he's, I think people like that he comes out and says, you know what, we're going to try to be out by Easter, but the actions he's taking have slowly stepped closer and closer towards what China's done. So I do anticipate we're going to do something very similar. That he's just trying to buy people time and hope, and thinking about how a lot of humans are not dealing with this very well. Let's see, I got an error about my internet slowing down. Is that still good quality? Now, a lot of people are upset about the stimulus being delivered as a digital dollar that can be tracked. So there's a big conspiracy that the New World Order is trying to take out fiat money and get rid of printed money so they can track and tax everything and have more control. So China rolled out a national cryptocurrency right before this broke out, and they've been burning their currency, saying that it's too dangerous because it spreads a virus. So if that starts happening in the United States, that would be obviously concerning. The world will believe that the Wuhan virus is under control when Chinese leaders officially reset a date for the annual Party Congress. It should be held in Wuhan with no masks to show the world it's gone. Most members are at-risk men in their 70s. Well, that will never happen. Okay, here's the Times. So this is outlet of China's Communist Party. China should consider dumping dollar-denominated assets. China doesn't need to hold flooding U.S. debts in dollars and should never pay for the U.S.'s excessive consumption and debt financing. Star analyst Ren Ziping, that's a famous fund manager over there. So we're already seeing it. They're attacking the dollar, bottom line. Both the Fed's balance sheet and the combined balance sheet of the big central banks have made new all-time highs this past week. Credible estimates have the Fed's balance sheet doubling again in the next year to 9 trillion. So here's where we got from the 08 crisis, cost us about 4.5 trillion to keep that rolling over the last decade. And yeah, I'd say at least we'll be at 9 trillion within a year. And that's going to primarily be from the Fed buying two assets. I think they're going to pump the most money into corporate debt and into US debt. I think that's where they're going to pump unlimited money. They have to keep those two alive. If they keep those two alive, we may not have a great stock valuation, but we're going to have jobs and we're going to have an economy that's running. The economy is not going anywhere. You know, it's really the people, the technology, and the resources that represent the economy. Who cares what the stock market's valued at? So I think they'll let the stock market tank and keep corporations funded and keep the government funded and keep employees funded. And that will mean the value of the dollar drops, very bullish for gold over the course of time. And US is going to have to inflict pain on other countries so that we can try to help offset these costs and not put it all on the US taxpayer. So yeah, China is going to dump some treasuries. Fed's going to buy up all of it. I think they have $1 trillion outstanding right now. But then what's China going to buy all of its goods with? Not with the yuan. Nobody wants that. So I guess they'll start trading in the euro, the yen. I mean, none of these countries are their ally. So are they going to trade with Bitcoin? I don't know what they're going to trade with. The Fed will own about 2/3 of the Treasury market in a year, but it will not get that high. Stimulus Congress will approve in the coming days will make 1 trillion. A lot of people want to bet on a bond market crash. I don't think that's coming anytime soon. That's the one thing they have complete control over is they sit there and print and buy up treasuries. And so we've seen them do that. They did 625 billion this week. And I just don't see the banks shooting themselves in the foot. So the banks are going to have to buy the government debt and the central bank's going to have to buy the debt back from the primary dealers when this is all over for a profit and a big profit. So that's really the simple calculation for the Treasury market. Now, Twitter's decided to let China's Communist Party have Twitter handles, but the populace of China can't. That's caused a lot of controversy. And the fellow, Jack Dorsey, somehow decided he should go to South Africa or somewhere in Africa 6 months ago, well before this all broke out, to work on cryptocurrencies. And meanwhile, he continues to let this communist Twitter handle just talk trash about America. So that's very, very interesting and odd. President Trump stops using Chinese virus, hopes the other US officials will make this change too. I believe Chinese officials will positively respond. The world is in desperate need of China-US cooperation to jointly battle the coronavirus. The two sides shouldn't let the world down. We'll see how much cooperation. Remember, China would not let our scientists out there to figure out what was going on. The only thing we probably had are some spies on the ground. Here's Jeffrey Gundlach hyping up the stock market. He also was saying he sold all his shorts, and I don't buy it. US President Trump to wait a 90-day deferral on tariffs. Yeah, we'll see. Again, if we really see US-China relationships improving over this period of time, I'll be very, very surprised. if you're lucky enough to live long enough to meet your adult grandchildren, they will all want to know about March 2020. Here's where he points out. Okay, so here's the start of this table is the top 20 gains and losses since 1926. 6 days in March made it red. Today's S&P impressive rally up 9.38 is the best since March 13 rally. 9.29 last week. March 14th through 23rd, the S&P was crushed another 17%. Worst 6 days after a top 20 day. Okay, so here's the 2 days we've had recently of 9%. And other periods of this are in 1929, 1933. This is when we entered the Great Depression. So obviously, the point here is that big up days in the market does not mean good things. Usually it just means they're trying to, number one, you got people covering short positions, and then you get these little bounces followed by even bigger drops. So you can see these are all right around the same time period where we had the biggest market crash in history. So that was the point of this chart he pulled out. Okay, COVID-19 deaths in Italy, Spain, and UK increasing much more rapidly than they did in China. So they're comparing, well, they're in Italy, they're trying to say it's older folks, they're living in a condensed area with their children, probably a lot of bad blood pressure, all sorts of factors. But Italy's death rate is just ferocious and way over 1%. Germany's death rate seems to be really low, which is interesting. So bottom line is it's just growing out of control. Jeffrey Gunlack, it seems expedient to convert deserted hotels into hospitals to bolster capacity. But how long would it take for travelers to choose those particular hotels once this is all trailing off? That's funny. They just let a cruise ship take off with new passengers, even though they found the virus was still surviving on the last boat, which is just incredible. Hipster, I like this guy's just funny. Seeing everyone bullish now. Trump was saying something about how not big of a deal the virus is, and Dr. Fauci shook his head. So they're saying with everybody getting bullish on stocks, even though what's coming ahead is dead obvious. Trump wants packed churches on April 12th. Is he trying to kill all of his voters? OMFG. I think he's just trying to give us a little hope. And there's enough people spreading the doom and gloom, as I believe our military is getting set up to enforce a more serious lockdown in pretty short order. Typical Florida unemployment claims, 250 to 1,000 a day. Yesterday, 21,000. I think this could be one of the single factors that's really hard to keep the stock market up, is unemployment just skyrocketing. In the UK, you still have to use different public transportation to get to work, even though they have limited. This fellow is saying, why don't we use the 20,000 black cab drivers to get people around and pay for it with the government? Not a bad idea. Speaking of which, our own US government continues to meet in gatherings. They're all going to get infected. Wait till you have your US government having top officials get sick and celebrities getting sick. That's not going to fare well. So Trump says he doesn't want to keep this shut down for longer than he has to. And the good news is he doesn't really need to do it for more than 60 days. 60 days and then roll out masks to everyone and wear those masks for another year. Get the vaccinations out. You deal with this problem and it doesn't cost that much money. and you become a hero. Give everybody some free money to support them, which government will pass it as the stock market keeps crashing. So we'll see if that's what we lead to. They know it works because it worked in China, it worked in South Korea, it worked in Hong Kong. All the Asians get it, so I think it won't be long. Police in Brazil use helicopter to create sandstorms to beachgoers breaking quarantine rules. Pretty funny. India's prime minister has ordered a 21-day lockdown for 1.3 billion people. That is massive. It really has to be coordinated worldwide lockdown for no less than 30 days, probably 60 days to play it safe. What happens? Everybody is sick, gets through the illness. They create antibodies. They're now immune. We'll have a large population who's now immune, and the virus will, for the most part, die. It'll basically restart the clock back to December 1st. Imagine we could go back in time and China rings the alarm that there's a virus that's growing exponentially, has all these characteristics. Everybody needs to react now. What would the problem be like today? It would be much, much, much more under control. Instead, China did the opposite. They let it grow. They threw the doctors in jail and they threw big parties. They helped it spread. I believe they did it on purpose because they wanted this to become a global pandemic, knowing that they would deal with it ruthlessly and cost less to their economy and come out ahead. Okay, let's see what other, oh, here's Putin. Now, who was the first to shut down their borders? It was Russia. Russia and North Korea shut down their borders way before everyone else, and that was with no cases. Yeah, here's what he wears to go visit people. It's airborne. That's the bottom line. It's airborne. Okay, let's see what questions we have out there and open the mic. I'll go ahead and take questions on open mic. Now let's start with Tony Colon.
Hey, were you aware that Zoom is limiting this chat to 100 people?
Yeah, that was our first issue with that today. So
yeah, I have a
we've
buddy
been sending
that
people to our live stream on YouTube that streams it privately, but we might have to upgrade our space, so we'll be looking into that.
Yeah, not might. We'll have it upgraded by tomorrow, so don't worry about that.
Okay, yeah, Eric is trying to get on and he couldn't, so I have my second phone on so he can hear it.
Okay, yeah, we'll have that fixed no later than tomorrow morning, so it won't happen
All right,
again.
sounds good.
Yep.
Thanks.
And yeah, our audience grows by the day, so thank you guys for all participating. Go ahead and raise your hand if you have a question. Or a comment. I'm happy to take some opinions. Let's see. Jim Wills, please.
Good morning. Do you?
Good morning.
Or good afternoon. Good afternoon. Do you? You had recommended a small position in the inverse tech ETF TCS. Given that the market is up today on techs, and therefore that is down, would that be something to buy today?
So my recommendation for the buy and hold is to have this ratio right here per 1,000.
Understand what the ratio is, but the timing of entry, if I have not yet entered that, would it be a good day to buy
Yes, sir.
some FAZ?
Yes,
And-
today's a better entry point than yesterday by far.
And this is a comment to all the trial members. I'm really upset with you guys. It took at least 2 weeks for your trades to pay for the subscription. So
Thanks, Jim.
fantastic. Thank you.
Oh, thanks, Jim. Appreciate it. Yeah. Okay. So I was a day early, a week early on the puts. We had a limit down Sunday night. And we have this little hero march with the media and everything. But I've told you guys, expect them to do everything they can to try to give us these little rallies and try to slow down the stock market crash. So yeah, today's a better day than it was yesterday. Now I'm not making any changes in my portfolio. So my return is down a little bit from those, but in the long run, I'm not concerned about it. I'm down 3% because I have the bond portfolio doing really well and the gold portfolio doing really well in this buy and hold. Julio.
Hi, how you doing?
Doing great. How are you doing?
Okay, good. I'm trying to get a handle on the options because I would like to step it up. And by the way, I did recover almost 1.5 of what I already paid for the subscription. So,
wow, way to go. Very good.
yeah, so that's I'm very happy about that. But I wanted to find out, where can I actually get information? Because I look at some of the options there that you had the videos, but I think I need to go a little bit farther back. For example, like the long, short, and all that kind of stuff, something that I can handle it right now. I mean, I'm getting it, but I would like,
basics. Yeah. Let me post okay.
I really would like to get into the other program.
This guy's got a really good channel for basics. I don't know if he's a great trader, but I don't like his style of trading, but I like his education. And I'll post a link. This is like super, super, super basics.
Okay. Yeah, that's what we see. What happened, they started using words that I don't even know yet. So that's when I get lost, because I'm trying to figure out what they're talking about. So I had to do a search, in the internet to find out what they're talking about.
There you go. That little playlist right there, you'll get the basics done.
Right. Once I get the name, all the names that you use in the trading and the options and things like that, out of the money, into the money, short, long, and I kind of read it, but I just want to really understand it completely.
Yeah, this set of videos is really good.
Okay.
I would ignore all the strategy based ones, just try to understand, because we're not doing spread, we're just buying and selling puts and calls. So it's super, super, super simple.
Right.
With what we do, but that's a good video.
Yeah, no, what happened, the engineering mind, they're trying to understand, what I'm,
for
what
sure.
I'm doing. I don't like used to be blind, I just want to understand that's all.
Yep,
Thank
very
you.
good. Florian says, how far can the TLT go? I'll probably look for taking some initial profits at 180, leading up to 180. Let's pull up a picture of the TLT. So first we were looking at a percent change basis, predicting that this would cross, and it did. Now I actually think on just a cost basis, these will cross in the near future, which is crazy. I think at 180, the old Pavlov dog, a lot of people are going to freak out, take profits, but I believe it'll go far further. In fact, I think it can go up towards 325 in the course of 2 to 5 years. Depends on how long it takes for us. I think 2 years, 2 to 3 years is probably when we tap out. And I think it'll be around 300 to 325, which is insane. What I'm telling you is that I believe this yield is going to get close to zero and maybe go into negative territory. Now, if we do a 60-day shutdown and we get everybody wearing masks, I think the damage to the economy will be the least possible. So that would make me believe that that this would have less upside. And so how long will it take for us to pay off the stimulus they're coming up with? Well, it's two parts, it's tax receipts. So if you have a slowed economy and less taxes and you're doing tax holidays, for heaven's sakes, well, it's going to take longer to pay off the debt we're planning to sell. I think it's going to take 2 years to pay off the debt that they're promising everybody right now. And so during that entire 2-year period, they're going to have to force these yields lower so that people buying that debt make a profit. So that's bad news for stock market for the next 2 years, almost no matter how you cut it. Now, if the stock market just crashes so far to a fair valuation, then I could definitely see it bottoming out quicker. And again, I want to see the underlying problem resolved, which is we have to stop the spread of this virus. And from what I can tell, which is a lot of research, probably close to 1,000 hours of research in this now, the only solution that works, that gets Trump reelected, has to be based around saving lives, not saving corporations. He's not going to get the vote. So the only solution I can find is a 30 to 60 day hardcore martial law style shutdown, and everybody wears masks for a year. That will solve the problem. And that's what China's done. So it's not like I made it up. That's what works. And really nothing else will work. So I think that stock market could crash very, very low, well below 200 easily on the stock market. And that the TLT will easily hit 225. So I think these will cross.
Sewell, do you have a question?
Hello?
Hello?
Hi,
Yeah,
Julio.
this is Julio. I have a question. At the beginning, when I signed up for the program, you said that we would have to be 45% cash to buy the SPY later. Now in the new thing that you gave us, now it's 16% cash. Are you planning to go back to stay cash to buy SPY later, or this is going for a long time?
Yeah, so same thing's going to happen. We're going to sell the inverse and then buy stocks at the right time. So,
Okay.
Yep. So yeah, we increased our down bet a little early. We were a little early. I'll be the first to admit when I make, a timing mistake. So we got the short position a day early. If I had done that today, I'd be in a better position. Let's see, our buy and hold let's see how much drawdown we have from being a little early.
Yeah, I just did it today, as a matter of fact.
Yeah, so you're getting in very good. So my buy and hold is down 2.8 currently for the year, or 2.3 in March. And so we're winning on part of it. We're winning on the TLT and the GDX. And now I'm anticipating that they can't keep the stock market alive at these levels for much longer, and that they'll be. So what are some catalysts? Well, I think one catalyst is unemployment rates are going to skyrocket. So that's going to be pretty difficult for the stock market to swallow. 2, right now they're pitching everybody, hey, Bill Ackman's buying the stock market, Jeffrey Gundlach's buying the stock market. Trump's saying we're going to be back to work on Easter. Government's throwing out $2 trillion. They're throwing everything they can to try to get people to buy stocks right now. But if a mortgage crisis can create a 50% stock market crash, a global pandemic that shuts down the economy for months on end is going to create more than a 50% crash. And this market's so much more leveraged. So I think the big pain is not even started yet for stocks, unfortunately. Who else wants to have their mic unmuted?
I think Sugu had a question in the box and her hand raised, but no mic.
Okay, let me look.
Yeah, I have a question.
Sure.
Hey, Josh.
Hey, and you know, you've explained this to me before. I'm still a little bit confused as to with TLT, like how does it work as far as like let's say the Fed is like, okay, I've lowered interest rates and I'm not planning on lowering interest rates anymore. Let's say he has does other things in his toolbox, but decides that he's not going to lower interest rates anymore. Why, why would people continue to buy if the Fed's saying, "Hey, I'm not even planning on lowering interest rates"? Not that he said that. I'm just wondering hypothetically.
Sure. Okay, so to understand the mechanism behind the rate cuts, it's good to go back to this. Okay, so the Federal Reserve is not federal, nothing federal about it. It's owned by the big banks. Okay, and the big banks are in a partnership with the government. In fact, a lot of the people who run the big banks end up running the government. So there's a relationship between the fractional banking system and all governments globally. Okay, so that's the first thing you really want to understand is that there's a lot of theater with the two parties. There's definitely different powers fighting over control, but at the end of the day, regardless of whoever's in the political seat, they really are at the whims of the banks. So why does the Fed make interest rates go to zero when they think there's a crisis? And it's this mechanism right here. So the Fed dropping the rate to zero doesn't make the yield on the 30-year immediately go to zero, obviously, right? We didn't see that happen. But it creates a loop that does. Okay, so here's the setup is the Fed drops rates below the yield of the bond. Okay, so in this case, the bond is started at like 1.79 right when they did that cut. Maybe it was 1.69. So now your primary dealers have a pretty nice deal here. Not only do they have to buy the treasuries, they get exclusive access to the treasuries as their auctions. So they get first stab at all the auctions. But they don't have enough. These banks don't have 2 trillion or more, 4 trillion, 6 trillion in their balance sheet to buy these debts. And even if they did have that, they wouldn't be able to do normal money market operations. They'd have no capital. So when the government has to create huge deficits, that's a problem. Who's going to buy the debt? So the big banks buy the debt. How do they do it? Well, they borrow from the Fed at the federal fund rate, which at this point is zero. So they borrow for free. And what are they going to do? They're going to buy the treasury with a positive yield. So that first transaction's a guaranteed profit. How much money will you borrow from the Fed to buy a treasury if you make a guaranteed profit of currently 1.39 on that 30-year? Okay, so sure, why not, right? It's guaranteed profit. Plus, they don't have a choice. They have to buy the treasuries whether they like it or not. End of story. They have to. That's their deal with the government. Okay. Step 2. Now, once they buy it, they could go sell it. But they don't, because that is not the plan. That's not what we're trying to do with our banking system here. We're trying to fund the government to paper up all the holes in the ship. So they will buy the treasuries with the money they've borrowed with a 0% interest and make an immediate profit. So that's step 2. Step 3 Now the primary dealer has a pretty sweet deal. They're going to take the Treasury, hand it right back to the Fed through the repo market, and use that to borrow at a very low interest rate. It's not zero, but it's still super low. Okay, so now they're losing money. What are they going to do with it? They're not going to take a loss. They're going to take that money and now loan it to a lot of people, but specifically to broker dealers. So that's like your Interactive Brokers, your Thinkorswim, all the big broker dealers. Okay, they're going to do that at a profit. So you're going to borrow at one low rate and lend at a higher rate. So now they're making profit twice. All right, now that money can go be lent out to Ray Dalio, mom and pops, whoever wants to borrow from the broker dealer. So that does provide some support into the stock market indirectly from all this, but it also allows this money to flow into every other asset, whether it's gold, bonds, corporate bonds, whatever the individuals choose to do, they're paying that interest to the broker dealer. And the broker dealer is paying the interest to the primary dealer, and the primary dealer is paying the interest to the repo. But they're able to get into that initial investment for free at the federal funds rate of 0. So they're going to be having to buy these bonds. Okay, step 6. How does this all work out to a profit? Well, usually there's a carrot at the very end of this whole process known as quantitative easing. So normally the banks have to buy the debt and hold it. And the incentive is that they believe that the longer they all sit there and hold these, the lower the yields will go. And eventually they don't sell this in the open market. They're going to sell it to the Fed through quantitative easing. So they'll permanently retire these bonds with no risk to the US debt market. So we're trying to sling as much debt as we can to foreigners, but whatever we have to pick up locally, at least on the big banks' books, will just be slipped under the rug to the Fed. And that's how our balance sheet grows over time. So this time around, the problem's too significant to wait to the end. So the Feds actually come in and said, you know what, we're going to buy your bonds as you want to get out. So the Fed's essentially signaling they're going to force these yields lower over time so that the investors who buy and hold are making a profit. So that's really the bottom line, is that the Fed has the complete power to force these yields lower over time. Now, they want to raise money for probably 2 years, and it's in the trillions. The deficit's going to blow out. Our balance sheet's probably going to double from 4.5 trillion to 9 trillion. So they're not incentivized to let the yield go higher, because then bondholders are showing a loss. They're really only incentivized to let it drop. So how far will they allow it to go, and how long do they want this to take? So we know what the stimulus plan is, 2 trillion so far. Now we watch the Treasury auctions to see how fast they sell the debt, and we can get a feel for, once that's completed and has been pushed into the economy and solved the underlying problem, that we'll see all this debt get flipped to the Fed for a profit, and then the banks turn around and buy up stocks at a discount. So the banks would love for the stock market to crash as they make a huge profit on all this debt that's been issued, which they will fling to the Fed for a profit and buy up stocks cheap. That's really the scheme that they've done in every single recession we've had for the last century in America.
Sounds a lot more like a scam than a scheme.
Yeah, it's a Ponzi scheme for big banks. And if they can put out of business smaller banks and gobble up more share of the corporate side, good for them as far as they're concerned. Not good for anyone else. But that's the mechanism that makes this ridiculous. It's ridiculous. Normally, if your credit rating is deteriorating because your income is reducing and your credit needs are increasing, then think about your credit card. Is the rate's going to go lower or higher? It's going to go higher. But that's not the way it works with us. With us, if we have a blowout in our deficit and we have to borrow more money. Well, we make it profitable for those who take that risk. So, so it's an upside down world. Tyler G has his hand raised. Hey, Tyler, how's it going?
Pretty well. How are you?
Doing great.
So, right now I trade on a couple different platforms. I have E-Trade that I'm using a lot for just the analysis, and then I do some on Robinhood. But if I'm to fund an account, to start to build a portfolio with you guys, I'm pretty familiar with E-Trade. Is that where I should fund my account, or do you guys have an idea of platforms that are best?
I like Ameritrade the best personally,
Right.
but E-Trade's fine. So we only trade these super liquid, super common products that are highly diversified via the ETF and also extremely liquid in the option market. So E-Trade's fine. I like Ameritrade.
Okay, and then there's the idea of these puts on the TLT that are available today. I mean, I have liquidity in my Robinhood account right now, which I do not have in my E-Trade. I mean, should I look at making executions on that today? Because it's looking good today to make those.
The SPY puts?
Yeah.
Yeah, so a lot of people come to me with a lot of accounts all over the place. And they're like, well, should I do the whole system and each account individually? I'm like, no, why don't you just say, hey, this accounts for all your SPY trades. This accounts for all your TLT trades. This other smaller account is good for your emerging market precious metal plays. And then you just look at your total assets as one whole. And then you can do the trade in whatever account is available. And that way you don't think of it as 4 individual systems that you're trying to run concurrently. Instead, it's just one system. And then you don't have to worry about moving money anywhere. You could just get going.
Okay, that makes sense. Yeah, because it seems like the opportunity, just the way things bounced up a little bit for those SPY puts in the immediate
you're
future.
getting mine anywhere from a 30 to 50% discount for the same hedge. So it's definitely a good buy.
And then on a day-to-day look at that, I guess we can't tell the future about tomorrow, but today looks like a good one for that.
Yeah, exactly. So this is the foundation I'm laying to build the house. So this is our foundation. The house will be owning healthcare, biotech, medical device, e-commerce, and military-related set of ETFs. After I think the real big flush occurs, which probably should be rolling out in I think 3 to 6 months is probably when it could happen sooner. Timing's always the most difficult part of all of this.
Hey guys, sorry to interrupt. I just wanted to mention TLT just had a massive drop in volatility. It might be a good time to buy some of the TLT options. Like I had I had an April 166 call that was $4.25, and it just dropped over the last 2 minutes from $4.25 down to $3.60 an option.
Yeah, so tomorrow's our pro trades. So again, if you guys do end up, so on a free trial, you're getting to see all the US equity plays, but you're not getting the other half of the picture, which is the bond market. Once you realize it's really a tug of war, this is the big tug of war in finance. And a lot of people only are educated in the equity side. But the equity side is really funny money. You know, there's not enough dollars in the world to create a valuation of 30 trillion. And of course, that's a lot less now. The bond market's real money. That's not funny money. That's real money. Every penny of it is real money. So it's actually much larger and more powerful and usually far more accurate than the stock market. So I would speculate that the insiders with all the funny money, which is stock shares, are trying to get out, and they're trying to use corporate loans to prop stock prices so they can sell their personal shares. And then they're all loading up into the bonds. I think that's just really the big picture what's happening here. So if you do upgrade to any of our programs, you don't get the bond trades on the free trial. But if you do get any one of these 3 programs, you get a bonus to get the boot camp. And if you want to take the TLT trades, that's the pro program right here on Thursday. So tomorrow, we have a whole set of TLT trades that you can jump into. That I'll just show you guys a little snippet of what it looks like. And we'll be adding to this tomorrow as well. So this is just earlier, the profit loss we had on some of these positions on the TLT. I haven't updated in a while, but so yeah, I'll be looking at taking more and more time premium and continuing to build into this position. So the call options on the TLT are doing quite well. We had a loss on the one we had to close at last week, but now they're jumping up nicely.
Hey, Gary.
Yeah,
Gary, how's it going?
pretty good. How's it going?
Doing
Took a little-
great.
Glad
So
to be here.
the recommendations on those TLT puts are staying the same into tomorrow is what you're saying.
Yeah, I'll close out the 27th tomorrow and probably load up a handful more tomorrow. Now that we really got the stimulus, we got that bounce in the stock market. I mean, this is like it's kind of like a layup for us right here with the TLT now.
Okay, cool. Yeah, if you could throw that back up on the screen real quick, I can take a screenshot of it and I'll have it.
Yeah, this is our current positions open on the TLT. So again, if you do want to get into these trades, guys, and get the alerts for it, that's covered in the Thursday play and the pro. But yeah, that's the big picture is the bond market is going to hog the resources and tank the stock market over time. Okay, let's see. I think there's some chat box questions. Okay, Doug has a question. I noticed that the SPY puts with a strike of 100 points above the money price, it looks like you're only paying for intrinsic value. In other words, does not appear to be any time premium or volatility premium. Well, I'm always paying the asking price. You guys are getting in probably closer to slightly above the mid price. So my 100 strike puts are down half. And so you could get those for way cheaper than I did currently. But yeah, this is really a blessing to have a little bounce in the stock market here. Well, for my standpoint, I get more time to prepare investors and build that foundation so that we can put the house on top when the time comes. Julio.
Yes, I have a question. On that spreadsheet that you show, is that something that comes right from the investment house, like TD Ameritrade, or something that you build? Because I see that you have tabs on the bottom for each of the stocks.
Oh yeah, that's our spread. That's our technology. It's just a spreadsheet. It's really just a glorified calculator that organizes your investments. All professional hedge fund managers that I know use spreadsheets with something probably not as nice as ours, honestly. But yeah, that's something we teach you how to fill out and operate in the boot camp. So this Thursday, I'm actually issuing a new template, which I could show you guys. And so we have something like a Tesla factory for creating these templates and then quickly issuing them to everyone. And so I've been optimizing it for 2020, which obviously was a bit of a shocker. I didn't expect us to be loading up on healthcare biotech. So here's some of the ETFs we're looking at getting. We have Aero, Defense, ITA, ONLN, e-commerce. The weighting I'm looking at so far is 35% in healthcare, 35% e-commerce, 10% biotech. Imagine China just every 6 to 12 months releases a new deadly virus on the world. So biotech needs to really catch up with everything related to dealing with viruses. We're in the dark ages. We're really in the dark ages with dealing with that. We have 170,000 ventilators. We need more like a couple million. So those companies are going to do really well. Biotech has to create vaccines. They have to. Otherwise, we're going to be wearing masks for the rest of my lifetime. So I think they, with enough money and enough energy, that we will get it done. Healthcare needs big bailouts. I mean, the average case going through these little tent ICUs is like 35 grand minimum. So if what's that going to cost? Americans can't afford that. That's more than some people make in a year. So either the healthcare insurance companies go bust or the government has to finance that. So I really like healthcare. Think of all the masks we need to create. I think we have like a couple million masks in our National Guard surplus, and we need more like 1 billion. So all these companies should do really well. Other sectors are going to just be demolished. I mean, think about restaurants, movie theaters, sports. I mean, until this is really dealt with, most sectors are going to be hurting. Airlines, cruise ships. I mean, Disney, you just go down the list. Unemployment's going to be rocketing up. Amazon's making money hand over fist. Walmart's doing well. So some companies are going to do well, but most won't in this environment. So again, the idea is buy the puts today, anticipate the future. The anticipation is that the bond market alone, with the stimulus package alone, will crush the stock market. Forget about people falling all over the streets dead if we don't deal with this and shut down the economy. Just the bond market itself can easily crush the stock market with all the money it has to raise in the next 24 months. So that's our foundation. That's your concrete to lay on the floor. That's going to really set the stage to put these companies on top of it, and it'll represent the house you're going to build. So
can I ask you a fast?
Yes, please.
Yes. Okay. Can you tell me more or less the inverse tech? What does the inverse mean? Because every time I trade it, it came out with a note, careful, blah, 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 read this. And what is?
Yeah, this is triple inverse technology companies, which have been the leaders of the S&P 500 for the last decade. And inverse, I think it's triple leveraged inverse banks. So banks tend to not do well with low interest rates in general, especially smaller banks. Now, the primary dealers, they've got a nice setup, but that's only like 20 banks. And the technology stocks, I believe, will have a lot of trouble because they're so dramatically overvalued and over leveraged. And those are the insiders who are sitting there realizing all this and just dumping stock as fast as they can. They have more stock than they could possibly sell. So they're getting, the Fed is loaning their companies money at a low interest rate. They're doing stock buybacks with the money, not hiring people, not doing CAPEX. And then the owners of these companies are dumping their shares as fast as they can. So yeah, those are very risky inverse. Unless I thought we're about to fall off a cliff, I would never buy those. But I think we're about to fall off a cliff. So I put those in our buy and hold.
Hey, we're going on about hour 3 and I've got to go. You want me to just give you controls or?
Yeah, we're going on 3 hours, aren't we?
Yes, we are.
Any last question? Last question. If you want to speak, raise your hand. Otherwise, we'll see you guys on Friday or tomorrow. Okay, Doug.
See you. Thank you.
Oh, thank you,
Thanks,
guys.
Tony.
Really appreciate it.
Thank you, guys.
Thanks,
You guys
Josh.
are awesome.
Thanks, Josh.
Okay, Doug says N95 masks have 3 micron openings. The virus is 1 micron. So even if N5 masks are not perfect in regular masks, only stop droplets, but do little. The virus has been
Oh, hi.
Aerosolized. Amazon has several warehouse staff that are positive. This means it may should be a virus and come in.
Hey,
Oh, you
Jay.
know what? I have one comment. There's a woman named Kathy Wood. She's the CEO of a hedge fund called ARK Invest. And she they run the hedge fund a little different than most hedge funds, where she invests instead of like doing the safe bet, she does invest in a lot of emerging companies which she thinks are going to have monopolies in like the next decade or 2 decades. Might be something to think about. To like they post on the ARK website all of their investments, and they have a couple of ETFs in emerging markets and in genetics and biotech and robotics and stuff.
Oh, cool. Well, send me
yeah.
a link. I'll check it out.
Will do. I'll send it.
Thanks, Josh.
Of course.
Let's
Jason.
do Gary.
Yeah, just a quick thing about the spreadsheet. I finally figured out that I needed to use Google. And,
Oh, good.
Yeah, we got them going yesterday.
Yeah. What an idiot. Anyway, is there any value in me continuing on with that? That first module you sent, like how to complete your? Because I'm getting.
Yeah, the work will be the same. I'm going to give you a new spreadsheet by tomorrow, which will
Okay.
be this template.
Okay.
It's easy to copy paste over, but you might want to wait till you get your new spreadsheet.
Yeah, you'll just have to copy any trades you input into the new spreadsheet.
Okay.
Yeah, we're actually going to find our spreadsheet together during the webinar and start filling it out together instead of me just doing it all. I'm going to try to have you guys, although that might
Right.
be hard if you only have one screen. So we'll see how exactly we go about it. But yeah, we're going to be building spreadsheets tomorrow in the boot camp.
All right. Thanks a lot.
Glad you got that link working. That's great.
Oh, me too.
That was driving you nuts, wasn't it?
It was. It kept giving me all these cannot open sheets, won't open. Got to have permission. Safari can't open.
Oh man.
So anyway.
Hey, hi.
Hi,
Hi,
Sue.
Sue.
Hi,
How's it
Jason.
going?
Hi. Good. How about do you think the gold will trace back to GLD?
Let's see.
Yeah, I'm kind of wondering the same thing. Like if I should sell my gold options right now and buy them back later, or if I should just hold them.
Yeah. Oh wait, that's SPY. Okay. All right. Everybody gets hopeful at new highs. Everybody wants to catch a big shoot up. Oh, let's see. This is getting pretty elevated already. Yeah, I'm not sure. I'll definitely have more analysis for you on that tomorrow.
There's a big gap.
Yeah, so I mean, we have China definitely trying to push people out of the dollar into gold. We've seen them doing that. But then we have other powers that be trying to force money into the bond market. So that'll be interesting to watch. I think there's a risk of volatility, but in the long run, spot gold and gold miners go up. I guess that's the best way to do it. So I would try to put time on your side with those trades and invest in dips.
Okay.
Is what I generally think is going to happen there. That's quite a rally there, isn't it?
Okay, thanks.
Michael Seebeck.
Hey, I was quiet today, but I just appreciate all the insight and enjoy sitting back and listening and taking it all in. I appreciate you guys, all you guys very much.
Oh, that's really nice to hear from another professional in the same industry. So thanks for that kind comment, Michael. Ron, how's it going?
Hey, great, Jason. Did you notice TLT gave back all their gains and then started to climb again?
Yeah, I think TLT is gonna be a slow grinder for us, and so two things to
Great
watch
buying
out.
opportunity.
Yeah, it's giving us more time. That's right. Yeah, let's pull up the TLT there.
I literally just over the last 5 minutes, I bought a lot of the TLT. I just doubled up on TLT options because I didn't have a lot of them.
Nice. Yeah, so the big risk to the TLT is a sudden influx of treasuries that are going to hit it. But if you think the banks are going to shoot themselves in the foot, then you haven't been watching what banks do for quite some time. Tyler G. And then that'll be the last one. We'll see you guys on Friday.
So when I'm buying these puts, I need to be looking at the VIX and grabbing them at what point?
No. Your job is really simple. I'm not worrying about timing. The VIX is low right now, so now's the time to buy these puts.
Okay. So when I'm going in for the bids and asks, I shouldn't be worried too much, or I should just grab them.
Correct. Yeah. So I'm talking like in week time frames, not minute time frames. So right now the VIX is relatively cheap compared to just a couple of weeks ago, and I think in the future it'll be much more expensive. So the jump today and yesterday in the S&P 500 has been a blessing to get these for less than I did my track record.
Okay, perfect. Thank you.
Yep.
Jason, what is VIX? I didn't get that.
Oh, the VIX is the volatility index. I'll pull that up.
What is that something that we have to buy, an option?
No, this is just a general, it's kind of like blood pressure, I think is a good way to use an analogy, or heart rate. So I guess this is good. Heart rate's a good analogy. So if the VIX is high, the stock market's heart rate is elevated, and
it's in pain.
Yeah. So
yeah, you just got back, Jason.
Oh, cool. We're about to wrap up here.
Is it high, the VIX now?
Yeah, it's high, but I think it's going way higher. So it's all relative. VIX is acceleration formula. So not speed, but change of price.
When you think about Tesla stock, is it nice to hold now or no?
No, I would not own Tesla.
You don't own Tesla, okay.
I wouldn't own any. So the only companies I think are going to really do well, at least at first, will be the companies getting a benefit from this new economy we're emerging into, which is, again, healthcare, biotech, medical devices, e-commerce. And if we go to war, or if we just continue to increase our military budget, which has been pretty surefire, then you want to own those.
Recommend to buy put on a Tesla, right?
I like to buy puts on a macro product like the SPY, but yeah, I think you could buy puts on Tesla.
Yeah, and Jack, just to kind of caveat that too. So, hey, so when Jason tells everyone to get back into the SPY, that's probably a good time to think about, really speculative plays like Tesla. Okay. Yeah. So that when you get that alert that Jason tells you to hop back in the SPY, that's the time coast is clear, the blood is flooded in the streets, and then maybe on the speculative side for you, pick some up at that time.
Yeah. Okay, so everything else is going to be on hold then, huh? Whatever we have right now, following whatever you have.
Tomorrow you get some trades to buy the TLT and call options on the TLT, which are doing really well. So that's your two plays right now. Play one is get the foundation ready for your house. That's your put options. So you want to have a strong foundation to build your house on, right? We don't want to just build on dirt. So we need a strong foundation. That's what this represents. Okay, so as soon as we get that laid and the market's crashing, we'll have the confidence because of these puts to buy all the materials we need to build our house. And those materials will be.
So buying a TLT equity, it would be recommended by you, right? Basically 40%.
Well, if you wanted, I would get into the pro system, Jack.
Yeah, I'm talking to Dean about it. I'm going
Yeah, so tomorrow I'm going to get you into bond market and gold market.
Where did you put my spreadsheet?
Okay.
Huh? Where'd you put my spreadsheet?
I like spreadsheets. Who's looking for a spreadsheet? There's a
I
child
think it was Jack's wife or family member or something.
All right, someone stole his spreadsheet. That's no good. Yeah, so tomorrow, anybody in our pro system, we're going to get you properly. What's a good analogy? So the put options are kind of like the concrete for your house. The walls are going to be the healthcare company. The roof for your house is the bonds. And maybe electricity is your gold. Okay, so we're building you a nice house that can weather a storm. So the concrete on the bottom of your house are these puts. We got to make the investment, okay, and sit back. That's critical. You have to have this to put the foundation down. The roof is your bond market, and we trade that on Thursday. All the plumbing and electricity, that's a smaller part of the house, but that's your gold. And then the walls, which probably have the best return once the time comes, is going to be the ETFs that give us exposure to US companies. So that'll be healthcare, biotech, e-commerce. So you're gonna have exposure to like Johnson & Johnson, Gilead. You're gonna have Amazon, Walmart, Alibaba, all the big guys who are gonna really do well from the new world emerging will be your walls. And then the ceiling against the critical, you don't want a house without a ceiling. Well, if you don't have a bond position that's at least 40% of your capital, you have no roof. You just got a house with no roof. So that's no good to you either. Does that make sense? Kind of just relating it to things that everybody can understand here.
Yeah, absolutely. And Jack, we'll definitely do that upgrade for you before tomorrow, but that way you can get into the webinar and walk through that allocation with Jason step by step. Okay, with the group. Let's see here. And guys, there's a bunch of people that are on a trial too that will expire either today or tomorrow. But if you're on the basic, you're not going to get access to that webinar tomorrow and to those trades. So if you're thinking about upgrading and you wanted to go to the, to attend the webinar tomorrow to jump into that content, make sure to, do the upgrade today so you don't have to worry about that and you're not scrambling last second to get in it. Okay. And a lot of people don't understand that the Thursday webinar is just specifically for the pro members. And we really do have kind of a heightened level of engagement, I would say, in that webinar, and really have a ton of professional traders on top of Jason that are in there as well. So it's pretty cool. Awesome, Jason. Let's see here. Hey, Mike O'Malley, see that you're in the webinar here. Good to see you in here. Mike, do you have your microphone by chance? No, maybe not.
Yeah, I think we're about to call it a day. We've been on here for 3 hours.
Okay, sounds good. Okay, guys. Well, yeah, just give me a call or just click the option button there, and we'll be happy to get you guys set up to profit from the stock crash.
Okay, guys, thank you so much, and we'll see you tomorrow.
Thanks, everyone.
Thank you, guys.
Thank you, team. Appreciate your time.
Thanks.